Ladies and gentlemen, welcome to the Market Open. Amit was unable to make it this morning. He had something he had to take care of, so I will be filling in. Don't you worry. Your market coverage starts now. Thank you, everybody, for being here. Really appreciate it. Thank you for the new members. Jay and Chris, thank you very much. Really appreciate it. George Mason here. Lena, what are you doing up so early? I normally don't see you until noonish. Rusty, what's going on? Got Hollis here. I'm beneficial. I'm sure Cactus Jack is there somewhere in the streets. PB. Thank you, everybody. Craig is here. You guys are the best. Chels, how are you? Lisa's here. Thank you, everybody. Really appreciate it. Craig, thank you. Thank you. Thank you. We have a lot going on. You guys know I like my mornings. I like to sleep in. I got up very early this morning to read through all the news, to bring you everything. Before we go into all the news, let's take a quick look at the market. We also had Professor Siegel speak on CNBC, which I thought was quite interesting. And the markets are doing good. You want to know why? Several reasons. Big one. Oil. Oil is still down 6%. We are at 83.87. I like it. I want it down at 65. I want it at 65. We'll see if I get my wish. Nebius up $10. BMNR up 5%. Still can't do anything with its life. CoreWeave trying to get back to 75 and then 80. We will see what happens. This is a big week for CoreWeave and Nebius. A big week. Iren trying to get past 40. Marvell's over 200 again. Oracle 118. No bueno. Can still go lower. It can still go lower. We got strategy at 94. We got service now. Getting back over 100. 101.15. Zeta fighting to get back to 20. Broadcom at 390. AMD, Lena's favorite company, 534. Hoodie-O Hood. Earnings this week. June is up super early. 547. I don't know how you do it. That's crazy talk. Broadcom 390. ARM 266. Salesforce 167. CrowdStrike 186. Meta 606. We love us some Meta. We're getting ready. Take-Two 236. Reddit 171. Palantir 125. QXO under 14. Not good. But you know what? It's a rate thing. I'm not even going to do it. I'm not going to do it. I was about to say something. Not going to do it, though. Palantir, 125. SoFi, trying to get back to 17. MU is saying FU to certain people right now. IBM, 217. We got Microsoft up just a tick. Qualcomm up just a tick. Google, better up than down. Taiwan Semi, almost 410. Amazon, 235. Who are the losers? You know what? NVIDIA should be up more. I'm sorry. NVIDIA should be up more right now. Who's the biggest? There's not many losers on the watch list today. Venture Global, 1356. SpaceX, 113. Can't catch a bid. We'll see what happens on earnings. We will see what happens on earnings. Bitcoin over 65,000. Verizon 46. Realty Income 65.71. It's a really good morning right now. It is a really good morning. Okay. Stocks are going up. The oil trade looks a little healthier. And we're going to get into all the stories right now before the market opens. I got the bell ready for 9:30. we have a pause in U.S. strikes against Iran as diplomacy gains momentum. I am not delusional. I have no idea if this is going to hold or not. But you know what? I'll take oil going down into earnings any day of the week, regardless of the reason. The 10-year fell 4 basis points. We're still at 4.64%. We got a Fed meeting on Wednesday, and that's going to determine the direction, quite frankly. The immediate catalyst for everybody is the pause in U.S. strikes against Iran. But let's not be delusional. This may not last. The oil reversal has eased in the near term, but you know what? We should be ready for oil to go to 100 just in case. Now, the Fed. Tomorrow starts the July Fed meeting. We get the rate decision at noon on Wednesday, and then we get the presser at 2:30. And you know what? I don't think we're getting a hike. I don't think we're going to get a hike. Now, Citi strategists said a hawkish outcome would be a risk for equities and argue that markets could remain sensitive to higher yields, oil prices, and incoming economic data. I agree. I absolutely agree with that. I think we're going to see if oil can keep going down, the Fed potentially change its tune. Huge news out of NVIDIA. Huge news. And you know what? Our favorite bear, Cassandra. Thank you, Dr. Cassandra, our favorite bear. Highlighted. Around and around we go. NVIDIA to guarantee $200 billion of ChatGPT spending on NVIDIA chips. And don't forget your weekly reading. This is important information of which all should be aware. A loan turns out to be worthless or worth less than was paid for it. And the majority of the loss, depending on the leverage, is borne by the guarantee system. That guarantee system ends with the taxpayer. Read all about it. Okay. All right. Michael Burry, Dr. Cassandra, at it again. So let's break down what's actually happening right now. So we had two deals. The big one, and Cassandra got it wrong. It's $250 billion, not $200 billion. And then the Naver $1 billion stake. So here's the core deal. NVIDIA is in talks to provide roughly $250 billion in financing guarantees for OpenAI. And this was per Wall Street Journal article that was published yesterday. The backstop would help OpenAI lease 10 gigawatt data center campus. 10 gigawatts that SoftBank's energy subsidiary is developing in Southern Ohio. The total project, get this, is expected to cost more than $500 billion, including the chips inside. And it would be the largest data center project announced to date. The full build out, 10 gigawatts of computing capacity, is equivalent to the output of 10 large nuclear reactors. The first 800 megawatt phase is targeted for 2028. 2028, and people are worried about CapEx going down next year. I mean, this party is going to roll, okay? It is going to roll. So how the structure works. NVIDIA would guarantee a series of financing vehicles designed to make lenders more confident in the funding source for the project. The $250 billion guarantee covers the data center lease and the debt needed to fund the build out, but it doesn't cover the NVIDIA chips going inside. NVIDIA is separately discussing financing OpenAI's chip purchases, which could total $350 billion. In my opinion, the credit mechanics are the whole point. OpenAI it lacks an investment grade rating right now. So debt raised against the lease commitments could be extremely expensive. With NVIDIA standing behind the payments, the developer can borrow more at lower rates and build faster. And we know NVIDIA has already invested $30 billion in OpenAI, which is part of a year-long spree, and it committed more than $40 billion to AI equity positions this year. Gigawatt. You guys are hilarious. Thank you so much for being here. You guys are hilarious. You guys are the morning crew. I don't think NVIDIA is bailing anybody out. I think Jensen really believes in what's happening. And you know what? If Jensen believes in what's happening, I think all of us have to. I'm taking the other side of Dr. Cassandra. I think he's wrong. If he's right, he may go down as the greatest oracle of all time. Now, power is a problem. And power for the project is actually controlled by the U.S. government and funded separately. Now, Commerce Secretary Howard Lutnick is involved in deciding which companies get to access this deal. And OpenAI has been in advanced talks for several weeks to lease the site, while Anthropic, Microsoft, and Google have also spoken with Lutnick. Who's printing right now as we speak? Burry? I mean, listen, if people want to pay $400 a year for his Substack, yeah, he's printing all right. He is absolutely printing. So for OpenAI, the deal would be its first step toward controlling its own infrastructure instead of renting from Microsoft, Amazon, and Oracle. For NVIDIA, it guarantees demand for its chips for years. This underscores the broader shift of tech giants tapping debt and equity markets to fund AI infrastructure, with spending set to top $700 billion this year. And we know the backlog for compute just from the big four, $2.1 trillion. $2.1 trillion. Now, the market's reaction. Oracle's up, NVIDIA's up. Some people are saying circular financing. I'm saying good business. We'll see what happens. Now, NVIDIA did make other news. They agreed to acquire a 4.5% stake in Naver through a $1 billion strategic investment, which works out to 1.48 trillion won. So Naver chairman Lee Ha-jin and Jensen signed the agreement in San Francisco on July 24th, with South Korean President Lee Jae-myung in attendance. Naver will issue 7.24 million new shares to NVIDIA through a third-party allotment. So what is this actually funding? The capital goes toward expanding the AI factory deployment at Naver's GAC. I don't even know how to pronounce it. I took a bunch of notes. Somewhere, the data center from 55 megawatts to 200 megawatts with a long-term roadmap toward 1 gigawatt of AI infrastructure. Now, Brookfield has entered a non-binding term sheet to fund up to $9 billion, with Naver funding the remaining amounts. NVIDIA's investment is subject to customary closing conditions, and Naver finalizing at least $9 billion of committed financing. All in, $10 billion AI infrastructure investment. This, like I said, is not stopping. No, I'm not just reading some article. I took a bunch of notes. I read through everything this morning. So I'm giving you guys the news about what is happening. AI is not stopping. We know the build out is immense. We know the backlog is 2.1 trillion, and Microsoft is about to set the tone. Where's good old NVIDIA? What's NVIDIA doing right now? 208.29. NVIDIA cannot break out. It could break out this week. Keep in mind, the biggest news of the week will come from Microsoft. They're reporting Q4 because they do not report on a calendar year. They have $153 billion left on the 2026 CapEx deployment. We find out what the Q2 numbers are. And I say Q2 because that's actually the numbers that we're going to get for the calendar year. Hypothetically, if they spend 50, they still spend another 50 and 50 in Q3 and Q4 this year. And then they have Q1 and Q2 for their fiscal year. I'm expecting Microsoft to drop 225 to 250 on this. 225 to 250 because Amy Hood, their CFO, said they're spending 190 this year and they are increasing in 27. If that happens, I got to tell you, these companies should go up. NVIDIA, Broadcom, AMD, Micron, SanDisk. We know Alphabet increased CapEx. Amazon's going to likely increase CapEx this week. Meta may also. Now, the market may not like it. Today, we're getting a little bit of a bump. It's the Amy Hood that makes it good. Kind of rhymes. I kind of like it. But in all seriousness, she's their CFO. And when she says they're dropping 190 this year, that's big news. Wednesday after the bell, we get the new number. And I think it's going to be pretty damn big. Lena, come on. Amit did not quit. He had something he had to do today. So he did not quit. He will be back with you for the close today. He just couldn't make it this morning. He just could not make it this morning. Now, if we look at the downstream effects of this, where's the money going to go? This is a trade that's going to broaden out, in my opinion. I think we see Eden, Vertiv, Johnson Controls, companies like Energy Transfer and Kinder Morgan may actually catch a bid. We need more energy. We need more cement. Caterpillar should do well. The amount of money that is being allocated to this, I'm not sure how Cassandra is able to stay bearish. I don't get it. I don't see it. Cassandra's definitely smarter than me. I never claimed to be smart. I'm actually not that smart. I'm just following the money. And when I follow the money, there's a lot of capital being spent. And if we look at what NVIDIA's numbers are, to think that NVIDIA can't backstop OpenAI is a little crazy because they're on track this year to do $393 billion of revenue, and they have over a 50% free cash flow margin. So you're talking about almost $200 billion in free cash flow this year. What do you do with all that money? What do you do with all that money? Well, you're going to buy back shares. You're going to increase the dividend the way they did, and you're going to make strategic AI investments. That's what you're going to do. Thank you very much, MJMY. Thank you. Is that a cow or a cat? I can't tell. I think it's a cat, but it looked like a cow in the beginning. Cows on my mind. Cows on my mind. And then next year, NVIDIA is expected to do $560 billion of revenue. I mean, that would probably be around 270 to 80 billion of free cash flow. NVIDIA can backstop whoever they want. They are one of the strongest companies in the market today, likely the strongest company in the market next year. They also have 53 billion in cash on hand. I am getting very wary about the Bears. I don't think they know what the hell they're complaining about anymore. Because to NVIDIA, guaranteeing 200 to 250 billion will give Burry the benefit of the doubt that he's saying 200. Is that even a problem? No, it's not a problem. It is not a problem for them. I think that we're good. Now, I want to play something for all of you. I happen to like when Jeremy Siegel talks. Not sure if anybody saw this earlier this morning. I'm going to commentate throughout the video. It was a really good interview. And the sound is on. No rookie mistakes.
Now, Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business and a Chief Economist at Wisdom Tree. I don't think, Professor, that sentiment is your favorite gauge, but could you just comment on the notion that, and I saw another article today, this is the most expensive market in history, was what I saw.
And that is a ridiculous statement. I mean,
but you're seeing that
1999 and 2000 were far more expensive than we have today.
My point was that you're seeing people say that, though, and no one's saying, wow, what a great buy here. There's a lot of trepidation right now. And I think I was making a point that probably the hardest thing to do would be to buy with both hands right now. Don't you think?
Yeah.
We'd have to be crazy, but that means it's probably the right thing to do.
Well, I think there's three things worrying the market. I mean, first of all, obviously what's going on in Iran. And by the way, if we do get a pause and we do get that straight opening, it's a 10% pop on the S&P, I think, without question.
Oh, what have I been saying? And I'm going to address some of the comments. I mean, about me being a permabull, et cetera, because it's a good discussion. I'm glad you guys brought it up. I'm always bullish. Please, I will address it. But yes, I agree with Professor Siegel that if we actually get a ceasefire, long lasting, this market's going to erupt. The Mag 7 have turned into the Lag 7 and really haven't even participated.
There is a little pause about, hey, what's going on in the AI situation? I mean, in the 5 a.m. hour, we had Dan Ives saying it's an arms race. And I kept on saying, well, is an arms race always the best thing? But I mean, it is a revolution of, fundamental value. I mean, everyone is debating, is the moonshots Kimmy K3, a wake-up call? How much will people pay for just that much better? And I kept on thinking about historical precedents. General Motors used to make more money per Cadillac versus its other cars, but it made most of its money on its Chevrolets. Who is going to pay for all that? But something that we should talk about, and that is the Fed this Wednesday. I become a little more concerned about the growth of credit, about the growth of the money supply. In the last 6 months, it's grown at a 9% annual rate, which is the fastest since the explosion that Jay Powell wrongly implemented during the COVID crisis. And it's very hard not to worry about raising rates. And that's it. Now, I don't think there's going to be any rate increase at all on Wednesday. There may be a couple dissents on the high side, but if this credit continues to rise, it supports a scenario that inflation is above target. And so those are the three things, boy. I mean, if we get some resolution on all that, boy, it's, the bull market is in the early stages. But I think that's what's keeping these concerns, I think, are keeping the market at least a lid on it for now. Right.
Maybe you're right. We go back and forth on AI, whether we're underestimating the power in what we're witnessing or whether we're already way out over our skis because the money doesn't exist right now for a lot of the build outs that we're seeing. Is it somewhere in between?
Well, I mean, you saw what happened last week. I mean, the word CapEx has become toxic, and the problem is that history says that often happens is excessive investment lowers returns. I mean, we have detailed history going back that firms that do excessive or just more capex than other firms do not have the stock returns that those that are marshal their forces very, very closely. But again, I mean, as I've been saying, the hyperscalers, all the providers, and the disk makers are all making money now. But the next revolution is everyone that could do what cost so much before at a fraction of the cost. Those are the group that I think can explode in margins and profits. And I think we're seeing that rotation now. The non tech stocks, so to speak, have really held up extraordinarily well. And as you said early on, I mean, it's really quite amazing what's going on in the Mideast, and oil is not at 120, well supplied.
Yeah, I'm surprised oil's not over 100 right now. And I will show the spread after Professor Siegel is done. Oil, I would have thought would have been 110 by now. Seriously.
I think if we just get some of those ships through and something there, and then with the AI promise, I'm still very optimistic on the market. But I think there's this reassessment about how much capex and, quote, the arms race will rebound to the benefit of these companies that are spending so many billions.
Hey, Professor Siegel, you're right about CapEx becoming a toxic term last week, just after we heard from Alphabet and saw the declines based on how much they'd be spending. But I started thinking about what would happen if some of those hyperscalers actually said, we're not going to spend as much money. That to me seems like it would be much more cataclysmic for the market at this point if they all said, we're not going to spend anywhere near what we had told you to this point.
Well, it depends on how they phrase it. Is it because they see demand going down, or that they see that they've achieved a degree of efficiency that they can supply that increasing supply of compute, which is in such demand? That's a positive. If they say I see demand going down on all mine, that's the negative. So I think it's totally how they phrase the reason for the CapEx.
I don't know. Google said that it was spending more because its demand is never ending.
Yeah,
Google continues to say they're compute constrained and they would generate more revenue if they had more compute. They're even looking to go to third parties. So I got to tell you, these are the best capital allocators. I'm all for it. I agree with the hyperscalers because they're the ones that built the companies that are doing over $100 billion in cash from operations. Hard to go against it.
The market punished it anyway.
That's a positive anyway. So the question is if we get the breakthrough on either the chips or the technology, that we don't have to spend as much dollars to really supply the increased compute that is necessary at these margins, I think that's a tremendous plus for society and really everyone.
What if AI replaces all the lawyers? I mean, what is that good for with the stock market and just society in general, Professor? Is that we could double?
Joe, I heard your comments about all these ads everywhere. I am as disturbed about them as you are. I mean, it's like,
they're praying for another camp.
You can't make your money off of work, so we're going to just sue somebody.
I know.
All right. I'm going to address a couple of things, but before I do, inflation real time is 2.05%. And if we look at the oil tracker that I built, the reason why I am saying that I am shocked oil is not over 100 is because we have a deficit based on consumption and production as of June. And the forecast based on the EIA is that we will not cross that over again into a supply glut until October. We will run at a deficit instead of a surplus for the next several months. I would have thought that this would have made oil go over 100. Hopefully, we get oil falling. I'm just not sure what's going to happen. I'm not sure. Now, the trend is that oil will fall back into the 60s based off of the EIA's forecasts. And that's where I'm ripping the data from. This is not like some little BS thing that I'm making predictions. It's all from the EIA forecast and the EIA numbers about what's been produced. So Steve is a permable. Yes, I am. But I'm realistic. Things can go bad. Things can go wrong. But here's the thing. I don't get worried about a 20% drawdown. I welcome it. Because you know what? You have to always be buying. I think that there's a lot of people out there that just think I put X amount of money in. This is the only money I'm ever going to put in. If you're always buying, you should always want better prices on things. And the stock market over the long term has gone up and to the right, regardless of how many 20%, 30% downturns we've had, or even 10% downturns. The market does not go up in a straight line. And yes, there's risks to the AI revolution. What if there's breakthrough on chips where some little company makes memory that's much more efficient? What if we unlock quantum? What if new chips come out that rival NVIDIA from Cerebras per se? These are a lot of unknowns that can't be proven. And you know what? Until they can be proven, it's very hard for me to agree with what ifs. We have to go with the facts. And look, investing's not easy. And yes, we can have a downturn. We absolutely can. But has the market ever given us a reason not to be bullish long term? I think that's the question. Before you guys start going always bullish, perma bull, blah, 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 go back to the 90s. Okay? Go back to the 90s. This is the S&P 500. We have had some really, really dark times and some really shitty times. From the dot-com bubble, it took from 2000 to 2007 before it got back to those highs. It took 7 years. And then you had the great financial crisis, and it took another 6 years to get back to where we were. Over that period, there was not a lot of alpha to be made. We were in a dead period for the market. But you know what? People who put in consistently reap the benefits after 2013. We are in a much different economy than we were back then. This is a much different market. Now, can the market fall? Yes. Can the market fall to 6,000? Maybe. 6,800 is probably more likely if we were to get a big correction. But every time we get it, you show me a period on this chart where the corrections, even if it took a couple of years, didn't go higher. Everything's an opportunity. If you're a trader or a scalper, yeah, you're paying attention to every little tick and you're hoping Dr. Burry's right if you're a short seller. But I know with how quickly the market moves, I can't time this stuff. I'd rather just stay long the S&P and long the companies that I believe in from my analysis. I mean, in my opinion, the only free lunch is just buying the S&P. And look, there's been periods where that sucked. In 2020, okay, I had a conversation with somebody super smart, okay, absolute killer in business, says to me, you know what? I just bought a bunch of the S&P for my daughter. What do you think? I'm like, yeah, it's a good play. 3 months later, says to me, well, that wasn't good timing. And then you know what? In August, all the money was back. I mean, even if we go Qs, which is more geared toward tech, same thing. I mean, yes, it took a very long time. But Qs are absolutely killing it. You go 5 years, more recent times, sure, 21 to 24 to get back. Okay. Still got back. You could have bought all throughout here. So when you say I'm a perma bull, it's because I look at things in 10, 20, 30-year increments. I'm not investing for the short term. I'm investing for the long term. So yes, am I a perma bull? Yes, I am. Are there cracks in the AI revolution? Not that I am seeing, but that also doesn't mean that there aren't risks. Risks and cracks are two different things. There's a lot of risk. There's a ton of risk. But right now, the money is flowing. And if we're going to choose to believe a bunch of short sellers over CEOs and CFOs of the greatest companies in the market, I don't know what to tell you. I'm not going that way. I am going on the path where I am going to take my P's and Q's from Amy Hood, Satya Nadella, Sundar Pichai, Andy Jassy, Mark Zuckerberg, even Elon, okay? I want to, Jensen, I'm going by what, because they're shaping the market going forward. I mean, what are we going to do? Say Apple's not going to sell iPhones or grow anymore? I will get to the Amazon news in a moment. Absolutely. I will move to the Amazon news in a minute. If we're going to say that Apple's not going to benefit from selling iPhones, potentially putting a paid service for Siri in there and increasing their services revenue, I think that happens. What are the Broadcom deals fake for multi-generational chips? I would say no. So I'm all for it. Amazon news. Courtesy of Cactus Jack. Cactus Jack, thank you very much. Amazon files FCC application, 5,105 satellites, direct to service network. Amazon's Project Leo filed an FCC application for a direct to service satellite constellation of up to 5,105 low Earth orbit satellites, providing voice, data, messaging, and emergency services. The details. Deployment timeline. Amazon plans to begin deploying the network in 2028 with satellites operating at altitudes between 510 and 580 kilometers. The filing follows Amazon's planned acquisition of Globalstar, expanding its ambitions in the direct-to-device satellite communication market. Exciting. Very, very exciting. I'm not exactly sure where Amazon fits in the grand scheme of things, but they're definitely making a play. And I got to think that they're trying to compete with SpaceX on some degree. You got to think that. And we got new news at Bank of America. I feel like Bank of America is going back and forth because now they're calling semiconductor sector most attractive valuation in years. Bank of America analysts led by Didier Scamana said the semiconductor sector trades at its most attractive valuation in years after an 18% Philadelphia Semiconductor Index underperformance against the S&P 500. Top picks, ASML, they have a buy on it. Let's see. Other calls, they're rating Nokia a buy. Am I really going to have to look into Nokia? I'm a little shocked at that. I'm a little shocked at that. I happen to like semiconductors. I think there's a lot of money to be made there. I'm in NVIDIA and Broadcom. I am looking at starting a position in Qualcomm. And the market's going to be open in 6 minutes. Let's see what's happening. Oil's still down. I really like CoreWeave here. As you guys know, I think we're in a situation where CoreWeave Nebius, Oracle could catch a bid this week. I just don't see how Amazon, Microsoft, and Meta don't increase CapEx. I just don't see how that doesn't happen. I would be shocked, absolutely shocked. Now, Michael Burry's taking the other side. He is ramping up his shorts. He added to his bearish bets on Micron, NVIDIA, and other semis. So Burry said in his Substack post that he sold short more shares of Micron at 933.86 and added to his NVIDIA short at 210.28. He also increases exposure to Flutter and DraftKings, which DraftKings I don't understand. And I'll get into why in a minute. He still has bearish positions in Tesla and Palantir. I'm going by Seeking Alpha blurb because I'm not paying Burry $400 for his damn Substack. He also sold short more Caterpillar and iShares Semiconductor ETF stocks. I mean, this is kind of crazy. I don't know. How do you short NVIDIA here? Thank you very much, Job Van Wagner. Appreciate it. How the hell do you short NVIDIA? I mean, man, NVIDIA is so hard, in my opinion, to short here. It just doesn't make sense. And you're going to short NVIDIA, yet you're going to buy DraftKings. Crazy. So let's look at DraftKings real quick, and then the market will be open, and I will ring the cowbell that Mike gave me. Here's the problem with DraftKings. Two big problems. First problem is the numbers. If you look at the TTM, you got 6.3 billion in revenue. The gross profit 4.8 billion. Fine. Their operating expenses are so crazy. 2.1 billion on SG&A and then another 2.2 on other operating expenses. They're barely profitable. And the reason that they're barely profitable, in my opinion, is because DraftKings is competing with something they can't compete against. Yes, sports gambling is addictive, et cetera, et cetera, et cetera. But if you gamble, and I don't know how many of you guys go to the casino or whatnot, but if you gamble and you go to the casino and you play blackjack, you play craps, you play, even if you go and play poker, you earn comps with that establishment. MGM and Caesars have many properties countrywide and even globally. They also have sports books. Why would anybody gamble through DraftKings instead of using a Caesars or MGM sports book if they already go to the casino? And I would argue the people that go to the casino are more whales than the people using DraftKings. They're going to earn comps. It just makes sense. If I'm going to place bets, I'm using MGM or Caesars because those are the establishments I go to. More MGM now because of Borgata in Atlantic City. But why would I gamble on DraftKings if I'm not earning comps with somewhere where I go to play craps? It just doesn't make sense. That's the big disconnect I have with the DraftKings thesis. If they weren't going against the actual casinos that have physical establishments that people visit for dinner, go to the concerts, go to the clubs, go hang out, that's one thing, but they are in competition. And if you think about the overall package, it's just like using your credit card versus cash. You're earning reward points. So I am bullish on sports betting, not bullish on DraftKings. I just can't get it to work in my brain. The market is almost open. Get ready for the bell. You can mute it if you want. It's going to be a little loud. Going to be a little loud. We're getting ready. It's 9:29. About to get after it, ladies and gentlemen. About to get after it. We are open for business. All right. Market is open for business, ladies and gentlemen. BMNR trying to get back to 17. We got Service Now, 103. Zeta trying to get up to 20. SAS is trying to do something. ServiceNow and CRM doing all right. SoFi just broke out above 17. It's up 3.5%. I like it. We got SoFi earnings Wednesday morning. Reddit, 174. Nokia, I got to look more into it. Bank of America is getting bullish on them. Everything's moving quick, ladies and gentlemen, out of the gate. You got Microsoft, 391. Oracle, 118. Palantir, 126. I think Palantir is going to have a monster quarter, ladies and gentlemen. I said it. I think Palantir is going to have a monster quarter on Monday. 1 week from today, we find out. Now, my prediction video will be out on Saturday. I'm finishing my model. I think that they have the possibility to do 95% year-over-year growth. We'll see what happens. I think they may slay the dragon. We will see. Rocket Lab, 65. IBM, 219. Googs, the googly moogly of the moogly, 326. I think it's cheap. Under where Berkshire Hathaway acquired shares. Hood, 96. We got Oracle staying at 117. QXO trying to get to 14. Broadcom, 387. Qualcomm, 169. You know what? Today may be the day I start a position in Qualcomm. We will see. That's a 3 to 5 year play, if not longer, in my opinion. But the profitability is exciting. Meta, still in the green. Almost everything's in the green. What's losing today? Even Netflix is up a little bit. Oil's down 84. That's good. SpaceX, oh my God. I feel bad for everyone that bought this. I really do. I did not want to be right. Like I did not want to be right on this. And then Nvidia's dumping. What is wrong with people? I did not want to be right on SpaceX. Long term, I think SpaceX is a great company. The new lockup period is going to be difficult, I think. And I won't be surprised if this goes under 100. Venture Global, 14. Energy Transfer, 2019. NVIDIA, 205.79. Let's get it up on the big chart. NVIDIA is crashing out. Are we going to make a run at 200? Look at that candle. And thank you, everybody, for being here this morning. I truly appreciate it. You guys are the best. I do it for all of you. If you wouldn't mind doing me a favor and subscribing to the channel, I'd really appreciate it. I can't believe this candle. It's still going down. Where are the investors to backstop NVIDIA? What are people actually worried about NVIDIA backstopping OpenAI? This is crazy. This is crazy talk. I don't get it. But you know what? It is what it is. 205, still significantly higher than where we were a year ago. That's a big candle down. Let's look at what the other chips are doing. What's AMD doing? AMD's losing some ground, 521. How about Broadcom? Man, not as bad, but still under pressure. Oh, Michael Burry, Dr. Cassandra strikes again. He strikes again. Apple's got a really strong candle. I mean, this is a great setup heading into earnings, isn't it? Apple can absolutely break out on good earnings. Can absolutely break out. I actually like this setup a lot. I'm not a technical person, but I like the setup. Microsoft. Trying to catch a bid. I think the market's going to wait to try to digest whatever they throw at it. I'm not a TA person. Let's not do that. I'm not a TA person. I'm actually going to play something in a minute. Where's Meta? Okay, 603. I have a feeling Meta is going to be 550 or over 700 at the end of the week. I don't know what direction. We need Zuck to say that he's not spending on Metaverse. I have a feeling he's going to spend more on CapEx, but he needs to talk up AI services. He needs to talk it up. All right, NVIDIA is starting to gain a little bit of ground again, 206.18. I think these are good deals, and I'm not worried about it at all. Let's see what the Squawk Box crew has to say. Be nice if it actually showed up. There we go.
There you
AI.
go. What you do about that Seinfeld?
Because I know you've spent some time thinking about that this morning. It's we're talking about a journal story here, but I know people involved as well. The numbers may go up. In fact, the story is about this guarantee. Essentially, says to OpenAI or to those that OpenAI would be leasing a data center from. In this case, in Ohio, 10 gigawatts, largest data center complex of all time. That will be there if, in fact, you worry that somehow they won't be, right, Jim?
Well, because it's 50 billion per gigawatt. How did that happen? It's 50 billion per gigawatt.
It's 50 billion per gigawatt. 1.4 gigawatts that I saw in Michigan is only around 50, a little over 50 billion. So yes,
it's a small facility.
Yeah, 1.4 goes.
But I mean, we did have
interesting. This is on government property, Carl, which is interesting to note in Ohio,
which is, by the way, the most favorable state in the union to do business. Now we know
that may be where you need to site a lot of data centers now to avoid, a lot of the local potential opposition, right?
But why was NVIDIA up so much initially, and now barely up? Do you think that's because the vendor financing component, which is no longer, by the way, hit? Now the vendor financing,
the circularity that people criticize
it's right in front of you.
Although in this case they are what I've said is a backstop. And by the way, why stop at 250?
But not for the actual
chips. It could easily be 350. You can just keep going with the numbers.
Yeah,
but again, it gets to this point of it's insatiable, the demand for compute, conceivably, at least amongst those who are providing the services to corporate America that apparently it doesn't want anymore.
In March of 2026, NVIDIA talked about the possibility that the spending could be over, at least until they come public. I got a quote that I'm calling for right now. Call for, that part of the TV, which you see that perhaps people didn't realize. OpenAI, they got to come public. Look at this. I mean, I totally believe in this. They're going to invest $30 billion. That's, of course, a very small number. But
I remember that quote from him.
Right? From the
They're in for 30.
Conference.
SoftBank obviously is one of OpenAI's largest investors. They are behind this Ohio data center project.
Power was SoftBank Power.
SoftBank. Again, on government, cited on government land, but you got to power. I mean, you got to provide. That's
right. Nat gas up
10 gigawatts.
Nat gas can happen.
I don't think that we are looking enough at nat gas. I really don't. I put a poll out. We got a lot of people here. Please let me know. I love data mining, everybody. SoFi, Hood, both or neither. Please vote. Nat gas. I know that nuclear is starting to get popular again, especially with the administration's press conference last week. But nat gas is going to be needed. I think that the upstream producers are going to do well, but more importantly, I think that this is going to be the environment that the midstream operators finally catch a bid. And they are finally in a position where we see real appreciation because their assets, and this is just my theory, there's no proof, it's a theory. You can't replicate their assets. So I'm going to look more. I know that Kinder Morgan is the largest, I believe, in natural gas pipelines, 76,000 or 78,000 miles of them. I really like Energy Transfer in it, and I really like Enbridge, which is a Canadian company. We're going to have to do a lot of work on it, but the midstream operators generate a very large distribution, and they are needed. Wow, 32% SoFi. We're going to close out the poll. Okay. SoFi reports on Wednesday morning. Oh, he's awake. He's awake, ladies and gentlemen. Tanner, what do you think of the NVIDIA news? Because it makes me very bullish. If you want to talk for like 2 minutes, I sent you a link. NVIDIA news, very bullish. Very bullish. But SoFi, you've been awake since 7 a.m.? No, I don't believe that. 7 a.m. Guy acting like he gets up in the morning. You can't have a sleep score of 99 and sleep until 7. You got to be comatose till at least 8, I heard. Got to be comatose till 8. It's garbage day. You know what? Another reason we need robots to put out the garbage so we don't disrupt sleep patterns. And Tanner will be live at 1. Please go watch him later. Now, we have a very big energy problem. Energy is likely to become the very big bottleneck, and we have not allowed nuclear the way China has. And that's going to mean that we need more natural gas. And I do believe there's going to be a big opportunity in the pipelines. So we'll see what happens there. Now, SoFi, I am not expecting that they're going to raise guidance. I think there's too much uncertainty heading into the end of this year. And they're, in my opinion, they're reporting on the worst day possible because they're reporting couple of hours before the Fed conference. I hate it. I wish they reported after. I really do. But it is what it is. I think SoFi is going to fire on all cylinders. Operationally, I think it's going to be a stellar quarter. I'm just not sure that they're going to raise guidance. And I think that the market has become accustomed to it. And in all seriousness, I think the market's beating up SoFi for the wrong reasons. This is not an operational story. It's actually one of the best operational financial institutions in the market. It's all perception. And if you remember what happened with the moratorium, you remember what happened with inflation going up and rates going up, everything that the macro could throw at SoFi shrugged it off. They innovated. I'm more excited this quarter about getting the news on big business banking and stable coins. Actually, let's see where the SoFi USD is at. As I am tracking it, let me bring it up. I think that can be a real line item going forward. I really do. But before we get to that, we're going to go back to the market because it looks like starting to get a little, strategy 97 and SoFi up 5.5%. Is this a sign of good things coming? Maybe. Oracle over 120. Maybe I'm not as crazy for buying the past 2 weeks. Reddit moving a little bit up $8. I like that. Hood 98, Salesforce almost 170, Zeta almost 20, ServiceNow 102. I don't hate that. I like it. I think ServiceNow is undervalued. Alphabet 328, Microsoft 390. I mean, I'd rather see 390 than 389, even though it's not that big of a difference. Psychologically, it's just 1 point closer to 400. I would much rather 400 heading into earnings. CrowdStrike 187. Nebius 184. I think the neoclouds are going to do well. Lululemon. Burry's new favorite company, right? He'd rather buy Lululemon and short NVIDIA because that makes all the sense in the world. I must have almost No intelligence, because it just doesn't make sense to me. Ethereum 1973, Nokia 921, Broadcom 385. We'll take it. We will take it. Netflix actually over 70. Go figure. It is actually over 70. SMCI, that's an interesting one that's not actually doing much. I mean, SMCI, I thought would be up way more. I thought it would be up way more, to be brutally honest. Micron 924, man. Micron is trading at such an interesting multiple because the market is acting as if it cannot catch a bid, and acting as if it's really cyclical, and if this party is going to stop, and maybe it does in the future. There's no indication that it's anytime soon. I mean, I like it here. I may have to get back in. I don't know if I'm going to, because I have other things I would like to buy. But man, this is looking enticing for me, because the estimates, I think, are going to go up again after they report at the end of August or beginning of September, whenever they report again. I think that's overdone, and I think the uptrend was warranted. Let's see what's going on with NVIDIA. 201.80, are you kidding me? The hell is wrong with these people? This does not... They hate, oh my God, they hate the fact that they're going to backstop OpenAI. People legitimately think that open source is going to kill OpenAI. Not good. Not good. And Sam, that is a good point, and I do have that in my notes for this morning. I never got to it. Let me bring it up. Or Sam, if you want to come on and discuss it, you're more than welcome to. So what Sam was talking about was that Chinese memory maker CXMT is surging right now, and 500% debut gain. Valuation $539 billion. And the Chinese supplier is making a competitive consideration for established procedures, going against Micron, Samsung, and SK. I mean, this is the first day, but it seems like China's going to make a real response. To bring on their chip capacity. Now, we'll see. We will see. Sam, I'll shoot you a link. Michelle, how are you? Michelle, what did Ray have for breakfast? I need to know. Because I haven't seen him. Jim, dude, you're like Captain Fitness. I guess that's why you're Captain Fitness, because you're going to the gym. Michelle just got to Venice. Oh my God. Cannolis. Ray, there he is. Sushi in Venice. I want to hear about pasta. I want to hear about cannolis. I want to hear about olive oil. Oh, that's what I want to hear about. Look, the Chinese market is going to be what the Chinese market is. What's Baba doing? I'm really not that concerned about that. And Baba, you know what? Baba is the play for China for me. That's why I took it in the stock draft. I've been thinking about getting back into it. I haven't. They have 4%, if I remember correctly, of cloud infrastructure globally. They're the number one cloud provider in China. They have their own AI chips, and they're vertically integrated. I happen to like Baba, I don't know what it's going to do, but I happen to like them. China has been no bueno. I'm with you. I am with you. Michelle, how about some gelato? Is that something that both of you can agree on? Gelato? I hear it's phenomenal over there. I hear it's phenomenal. Okay, if Clarity Act passes, now BMNR is up almost 13%. I am a bag holder on it. You had some last night. Look at you showing off. I love it. I want to know, did you send me pictures of it? You know I don't check my phone often, but I will check later. I want a picture. Living vicariously through you. BMNR 1784. I'm a bag holder. I believe Ethereum is going to do well. And I said I was going to bring up the SoFi USD. Let's see where it is. So this is where we are on SoFi USD. I am currently tracking it. Total supply 304 million. Solana's 204 million of it. Ethereum is 99.9 million. This is what the chain looks like. On a daily volume, 4.2 million on the 22nd, 1.6 million on the 24th. I'm interested in what Noto or Chris LaPointe says on the conference call. I really am. I want to see what they say about this. So we'll see. But yeah, the volume is still around the same, just cracking over 300 million. But that could be incremental revenue for them, which I'm really excited about. And there you go. Zeta broke past 20. Zeta broke past 20. Their earnings should be very exciting because there are, from what Nick and I have discussed, there should be 2 more announcements that we don't know what they are yet for earnings. Because David Steinberg said that there are 3. There are Dan Ives, hold on. I can't back it up. What the hell? Hold on. Let's see what Ives was talking about.
Whether we're talking about what we're seeing in the Middle East right now, whether we're talking about the Fed, whether we're also just talking about what we've seen with the markets, going back to your comments, Jessica, about, some consolidation and key levels we're watching here for the S&P. So let's start with, and Dan, I'm going to kick this one off with you. Let's start with what we are seeing coming out of the Middle East, which is pushing crude prices lower, pushing yields lower, and pushing stocks higher here pre-market.
Look, it's more of that risk on, and I think it all dovetails into tech's going to lead this market higher or lower. And earnings is really the key. And I think you get these validation moments really 4 times a year. And I think it's just such an important week that you're seeing. But geopolitical oil, it doesn't ultimately change the demand trends that we're seeing in tech across the board.
Yeah. And of course, tech has become its own geopolitical dynamic as well. Jessica, I want to get your thoughts on all of this and how important what we're seeing in the Middle East and other parts of the world is to the market.
It's extremely extremely important because last week we saw, even with record earnings, I mean, we have the S&P 500 coming in with 34% EPS growth. If you take out Google, it's still 24% because of the investment that's there, and a very high guidance ratio. That's 1.9%, the 3-month guidance ratio, the highest it's been since 2021. So that's really positive earnings. However, it's had a difficult time going higher because of the geopolitical risk, and liquidity seemed to be leaving the market markets rather than the fundamentals. So that headline risk still exists. Like I said earlier on with the technical levels, it's important to see that 2-year note come down, and that comes in harmony with what we've seen this morning. So I'd like to see a continuation of that. Otherwise, we are still going to pause. And I think it's difficult for tech to lead us higher, even though it should. I agree with you. There's sensational demand, but it's difficult with this liquidity leading the market rather than record earnings.
Yeah. Amy, I want to get your thoughts on all of this.
Yeah, one thing we're looking at is obviously this is going to be a tumultuous week just simply because of the concentration of market cap that's reporting. And one aspect that I think is very interesting is if you simply look at the implied moves for the big four that are reporting this week in Mag 7, they're actually fair to cheap when you look at kind of what Google did last week and you look at the historical earnings realized moves of something like a Meta, are pricing about a 6 to 7% implied move this week. And we've seen these things move more than 10%. And we certainly saw a massive realized move from Google last week. So I'd be watching kind of how volatility behaves in such a critical week.
Amy, I mean, just to dig a little more deeply into that, why do you think that is? Is that because we've already seen a downdraft in some of these, well, maybe not in the hyperscalers, but more broadly in the tech complex?
Yeah, I think that's the key observation, which is there has been some in sympathy move already from some of these names post Google. So the argument, I think, from some investors is, well, we've sort of preceded it. I don't necessarily think that's going to be the case. I think a lot of new information tends to come out and people tend to still be reactive idiosyncratically. So, what surprised me is equity put skew, so that demand for hedges, it's fairly sanguine across all four big companies that are reporting this week from the Mag 7. And that still surprises me because I do think that you're going to get some more idiosyncratic CapEx guidance. And, that tends to move things, even if we've had some moves in sympathy, which is true, did happen with Google last week.
Yeah, I see you nodding your head, Dan.
Yeah, I think she brings up just a phenomenal point in terms of like the move on Alphabet. There's a view like, okay, what's going to happen with Microsoft, Amazon? When you piece it all together, it's a puzzle. You put it all together, it just shows the spending, idiosyncratic, but combined on CapEx. That's what's driving tech. And then you ultimately see in the chip players. And I think as you piece it all together, that's bullish for tech stocks.
Yeah, I mean, meantime, we got an inflation report this week, PCE, Jessica. We get some other data as well. And then, of course, this Fed decision. It's been interesting to see how much Fed funds futures and even prediction markets have started to price in more of, and I think it's probably still a long shot, but more of the possibility that you were to get a hike here this week. What are you watching with all of this, especially as Fed Chair Warsh has pulled back on communication? You could also make the argument that the market is doing its job for him, tightening already.
It is. We certainly see that across all yields on the yield curve. What is interesting, I feel like he's in a bit of a conundrum. He either can, if he was going to hike, be based on the market action that's happening within the yield curve with the 30-year going as high as it is. We put in a hike that will tame the bond market. That, I think, would be him listening to the market, and perhaps we don't want to hear that. We want him to react to data and stay true to credibility. That's what I'm watching with him, is credibility. On the other hand, he has this oil shock, but he wants to look at the underlying issues of inflation and has built, of course, a task force naturally around that. So if he were to hike based on oil, then that would go against the framework that he's already put in place. So I think that's a bit of a conundrum. But what's important to watch, and it's going to be very difficult, is how he feels about oil. Is there a continuation of that? Is it transitory? And then that would give us some credibility from him if he were to act. But I don't think a rate hike is on the table. I actually disagree with what the bond market and prediction markets are saying, but nonetheless, it's his words, as little as they are, that are going to be exceedingly important.
Yeah, and just to put that.
Yeah, I don't think that we're going to get a hike. Doesn't look like many of you believe that we're going to get a hike. I don't think the Fed's going to do anything, actually. I believe they hold. I'm with all of you. They're going to wait at least until September. I think they wait for Jackson Hole. We need to see what Warsh actually does when it comes to real-time data. That's going to be the big key. That's going to be the big key. And this is a little wild because I thought the market would have been up more after oil went down 6%. And Reddit's making a move for all of you that are in Reddit, up over 5%. Same with Strategy and BM&R. Oracle, 4.9%. We got a lot of companies over 4%. Palantir, trying to make a move back. Let's look at the chart on Palantir for all of you. Palantir is trying to make a move back. We're up 4% right now. It's up $5. Been an absolute rocket ship. No question about it. Year to date, looks like it's settling down. Over the past month, we're up a little bit. But I'll tell you, this could be, I mean, that's a big candle. This could be very exciting come Monday. They got a real shot at doing 90% plus year-over-year growth. They added 204 or 208 deals worth over $1 million last quarter. I think it was 208. This is a company that, you know what, it got too expensive. But on a valuation standpoint, Palantir actually looks pretty good. Believe it or not, it does look pretty good. If we go to the profitability or the EPS, forward EPS, Palantir versus ServiceNow, Workday, and Salesforce. Palantir still looks not crazy anymore, even after the little bump from 109. Trades at 42 times 2028 earnings. And look, their EPS assessments could increase after Monday. Right now, you're paying for 110% EPS growth over the next 2 years. I think that they're in a position where they keep adding deals. If their net dollar retention goes past 150, that's pretty wild, because that means every base contract is adding 50% spend. I mean, that's a very important metric. The net dollar retention does not include any deals over the past 12 months, according to CARP. They could be at the beginning of an S curve, not at the end of an S curve. If I look at their revenue and what they've accomplished, that's the most exciting thing for Palantir that we may be getting wrong, or I may have gotten wrong in the past. Now, I don't think I was wrong on valuation, because obviously it's come down. But if we look at the quarterly revenue, that's an S curve. But you know what? I don't think we're at the end of it. I think we're still at the beginning. And this is a company that can get to 3 or 4 billion in a quarter. So long term, I think it's going to do well. Is it going to absolutely jump on Monday? I don't know. It's still priced for perfection. But that perfection is getting a lot more realistic. And if you get accelerating growth with really good forward guidance, this could get bought up. This absolutely could get bought up. Wait for the corrupt connections to stop working for Palantir. Okay. I mean, all right. I don't know what to say to that. I do not know what to say to that. Let's go back. Let's see what's going on with NVIDIA. Oh my. They can't catch a bid today. NVIDIA cannot catch a bid. In a week where Microsoft and Amazon are going to absolutely, well, let's frame it like this. On a week where Amazon and Microsoft are likely to raise CapEx, NVIDIA can't catch a bid. This is a little wild. I don't think that the 250 billion backstop for OpenAI should be impacting this, and I don't think the news out of China should be impacting this. We'll see what happens. Now, Qualcomm, what are they doing? Up to 19. They're passing higher costs on to consumers, which is a move I don't really like with their profitability, but it is what it is. It is what it is. Yeah, Sam, I'm with you. I am very long Qualcomm. Qualcomm makes so much sense. People don't like it, which is fine. But you know what? If not you, but if individuals looked at Qualcomm and you looked at what their revenue has done on an annual basis, they're not seeing a lot of growth. But not seeing a lot of growth is one thing. You look at their cash flow, the operating cash flow and the free cash flow. I mean, that's really incredible. 12.8 billion in free cash flow. This is a company that trades at a very low multiple that has a generational opportunity from Meta and Microsoft with their CPU server chips in 28 and 29. This is, I'm with you, 2030 guidance is incredible, and you're buying it at an absolute fraction of a cost compared to AMD and Marvell, which I know a lot of people love those two companies, and I got nothing against them. But if I stack Qualcomm up against them, it does not make sense to me at all. It would be nice if I could type. It'd be nice if I could type and actually get Marvell technology in there. So Qualcomm, 178 billion market cap, AMD 817, Marvell 167. Crazy part, from a revenue standpoint, Qualcomm does almost as much revenue as both of them combined. It does more gross profit, more EBITDA, more operating income, and more net income than both AMD and Marvell combined. You look at margins, nothing not to like here. And if you look at what we're paying, 14.2 times free cash flow, wild. You're paying such a low multiple. And if we actually look at the forward estimates on Qualcomm, this is the sleeper. Nobody likes it. This, in my opinion, is the sleeper chip company, because you go to 2030, I mean, 7.5 times earnings. There's so much forward growth once those CPUs come out on the trend line, so much forward growth in EPS. And then you look at revenue, you're talking about a large step up. You are talking about a large step up. So I'm going to start position this week. It may even be today, but this is not in replace of anything. And that's exactly why I like it. Ain't nobody care about Qualcomm right now. You're right. That's why I like it, because nobody's looking at it. Nobody's looking at it. Nobody's caring about it, which is fine with me. I relish in that, because I am willing to wait several years for the investment thesis to play out and to build out the position. So I'm going to go alphabetical order. Oil's still falling. We're under 84. Man, AMD is getting smoked right now, 502. It's trying to hold 500. Broadcom, 383. Where's CoreWeave? Oh, my God, 71.76. I may have to backstop my investment again. I think if we get to 66, I start adding. I bought a bunch in the mid to low 70s over the past 2 weeks. I will probably backstop it at 66. Salesforce, 171. All right, Meta's turning around. I like it. 608, trying to get to 609. Microsoft 391. Man, Micron's under 900. The headlines out of China. Oh, opportunity. Nebius is up, which is nice. Okay, Nvidia's moving off at 201, but I mean, that's not a big enough green candle for me to really believe it. Oracle 121, I like it. Palantir 128, Qualcomm 169.45. And don't forget, Qualcomm has increased the dividend for more than 2 decades. More than 2 decades. SoFi may lose 17. And SpaceX 110.94. Oh. This is down what? 28%, 30% since the IPO. And keep in mind with SoFi, the stock and the company are 2 different things. How is CoreWeave bankrupt? How? I'll address that in a minute. I don't know why people think that CoreWeave is bankrupt. That doesn't make sense. Verizon, Chris's spreads are paying out right now. 47. You know, for some reason, people don't like these boring companies. I love them. I don't know why. Why would we not like companies that pay a dividend and compound earnings? I mean, I got to throw McDonald's on here. Is McDonald's on this sheet? We're adding it. What's McDonald's doing today? Up $3. McDonald's is up $3. And Micron's tanking. Let's go on the big one. Let's see the candlesticks on this one. Look, in the short term, I have no idea what Micron's going to do. The stock should follow earnings, and their earnings should be amazing over the next several years. I mean, that candle is almost representing this one back here in the middle of July. I'm in Nebius. I like CoreWeave better. I'm in both. I am not in IREN. Let's look at CoreWeave. $71.31. Oh, it's so ugly. It is so ugly. All right. And I think this is good for the other side of the trade. Let's hear what Eisman has to say.
But you wouldn't necessarily short this market at this point, would you?
I would not. I've lightened up. I've taken, I'll give you an example. I sold my Google a couple of months ago. I've owned Google. I can't even tell you how long I've owned Google. But I felt I wanted to reduce my exposure to AI. I haven't bought anything to replace it because, buying something defensive or staply is.
So he's out of Google. He's reducing his exposure to AI. You got to take it seriously. And look at that, Dougie getting his paycheck on Friday. Yep, QQQI paid out. I love him, Dougie. I love him.
Is kind of a waste of time.
Why?
That doesn't go up. They don't go up. People either want to buy AI or they don't want to buy AI, but they don't want to shift out of it to buy Clorox.
So if this is a binary situation where AI succeeds and the market continues to push higher and higher.
Correct.
What happens if AI doesn't succeed?
I think we have a big correction.
How big?
Now that's a hard question. I don't know. But I mean, it's all one trade. It's just literally one. I mean, even people who think they're diversified because they own 60% stocks and 40% bonds are missing the fact that they're actually not diversified. Because of their 60%, more than 50% of it is tech and AI related. And of the 40% of bonds, most of the new issuance of bonds is AI related. So even people who think they're diversified because they own bonds are not really that diversified. What scares me is that it's all one trade. So it better succeed.
What are you doing if you've sold Google? What else? I mean, if you sold Alphabet, what else have you done?
I'm just sitting in,
I
have cash until I can try and figure out what to do.
What would it take to get you to deploy that cash?
I don't know yet. I really don't. I mean, I don't think this debate's going to get settled within the next 2 weeks.
We talk all the time about the Middle East because you can say AI is driving everything, but you could also say oil prices are driving everything right now, too. Oil prices are down 8%. You see the market's up significantly. How much does that factor into it? Do tariffs factor into it?
I think it factors it to a degree. I don't think this war is going to be over anytime soon. I don't think. I mean, I think President Trump wants the Iranians to give up their nuclear fuel, and the Iranians are not going to give up their nuclear fuel. So I don't think there's much to talk about. So, we get these lulls, but then it doesn't do anything.
But you're not worried about oil prices at this point?
I think actually there's an oversupply. Okay. That's why the Halima, who was a guest on my show too, pointed out that China has basically stopped buying oil, which is why oil prices haven't gone up that much. You would have thought oil prices would be 150 at this point, but they're not because there's actually an overproduction. And I also think some of these pipelines that are going to be able to avoid the Strait are pretty close to being finished.
Yeah, next year, I think maybe 2027.
Yep.
Is when you hear from.
And that's why I'm not really all that worried about oil prices.
I mean, AI is going to be something. I'm like you. I'm not sure what. But does for lack of a better term, the bubble popping, does it come from people slowing down on the build out, or does it come with the promise of what it's supposed to do disappointing people?
I don't necessarily think the latter.
It's going to be unbelievable.
I think
it's going to be amazing. It's
going to be something really good. That doesn't mean that everybody succeeds.
Yeah.
That doesn't mean that
these circular deals, the latest NVIDIA deal, like you got to read it, and it's like they're going to back this, but then they're going to provide money for OpenAI to buy their chips, and it's so incestuous.
It's convoluted.
It's totally convoluted. You don't know if there's any. You don't know if there's any real profitability in any of the machinations that you figure eventually.
There probably is for NVIDIA, who was saying probably.
Well, there is, yes, for NVIDIA. They're not doing it for free.
Yeah.
But look, I think one of the bottlenecks is that Anthropic and AI and OpenAI are responsible for a lot of the spending that people are doing.
Right.
And Anthropic and AI have models that are now much more expensive than the competition. And I think that is a potential bottleneck.
I'm a much better cook because of AI. And
you are?
Yes.
Huh?
And griller.
Okay.
When I grill things on much better. I
mean, I get what Eisman is saying. I get it. I don't necessarily agree. I don't think that there's overproduction by any means. You look at the global production on oil, we're in a deficit. It's a very easy supply and demand. We are currently stripping out about 3 million barrels a day in a deficit. So I don't really agree with that. The oil situation can get worse. Now, he is right in the risk. This is all one trade. Thank you very much. Really appreciate it. You guys are the best. Thank you so much. Sundays, Love them. Love them. Love them. Thank you. But he's right. AI is all one trade. It absolutely is. And if AI fails, the market's going to absolutely have the bottom come out from it. The question is it going to fail? I don't think it's going to. We've seen every tech revolution over the past 30 years. And I'm interested. I want to do, and look, I can't see anything, who votes how, okay? But I'm going to date a new data mine. I want to see the age ranges for people viewing. What is the age range? Or what age range do you fall in? Say 18 to 25, 25 to 35, 35 to 50, 50 plus. Please answer. This is going to be, no, I put a poll out. You don't have to write it. You don't have to write it. I put a poll out. You don't have to write it. Let's get as many votes as we can on this. A good amount is over 35. Interesting. I would have thought it would have been the other way. Very interesting. Okay. So 35 would be 1991. So there's still a decent amount of people that really don't know life without the internet. But there's a good amount of people that do. So think about this. And I grew up before the internet, before cell phones, before everything. So I've lived through every technological shift, as a good amount of you, this is indicating. But for those of you that I guess were born in 95 and forward, okay, I don't think you know life without the internet. You don't know life without cell phones. You don't know life without tablets. There was a world in the 80s and early 90s where there were no laptops. There was a world in the 80s and 90s when you didn't have Netflix, you didn't have Hulu, you didn't have any on-demand TV. Your on-demand TV was pay-per-view. And we grew into a technological revolution where microprocessors got better, fiber was laid, the internet was born, laptops became affordable, cell phones became affordable. Cell phones went from analog to digital and then to smartphones. I mean, we had Walkmans and Discmans before an iPod, and the iPod was the precursor to the iPhone. Technology never stops. It always innovates. And I think that's where it's easier for me to remain very bullish on the market because of that. When I think about how much compute and how much innovation has happened over the past several decades, it's been immense. And to think that that's just going to stop is very hard for my brain to comprehend. Now, that doesn't mean that the market's going to go straight up, and it doesn't mean that we're not going to have peaks and valleys or difficult times or recessions. But we still don't have robotics, such as humanoids. Diana, what's going on? The poll was on YouTube, Shaggy. Now, we still don't have full self-driving nationwide. We need a lot more compute from that. AI is still really in its infancy. We don't have super intelligence. We don't have AGI. I can't queue up Netflix and say, make me another season of The Recruit since you canceled it after 2 seasons. I can't go to HBO Max and say I don't like the ending of The Sopranos. Make me another ending. Ultimately, we're going to need so much more compute that I think that this is really going to be good. And days like today are just reminders that things can go wrong, especially with NVIDIA going under 200. Can you believe that? NVIDIA is under 200. Getting smoked. It's okay. You know, Dougie, that may be too hard a math for me. We may have to keep the riddles a little bit easier. You know, I can't do math like that. But NVIDIA is teetering around 200. It's all right. Look, it is what it is. It is what it is. The market does not like the circular financing in their eyes. I don't think them backstopping is circular financing, but you know what? They better be getting equity out of this deal. AMD also. Oh my God, AMD lost 500. Now I do think AMD is a little expensive. I think it's a little expensive. But you know what? It's still a great long-term company. We need so much more compute. And if you listen to Lisa Su at the conference, I think it's just super bullish. Now, let's see Tesla. Is Tesla something I actually want to own at a much better valuation? Jake Rizzo knows my beef with Tesla. I just hate the valuation. I love the company. I hate the valuation. And I think it's going significantly lower. I really do. Yes, the market sells off when Amit goes away. I'm fully aware. I am fully aware. SpaceX, 110. That's ugly. That is ugly. Anybody who thought that SpaceX was going to 400 out of the gate is crazy. Joni, I'm with you. I happen to think that NVIDIA is becoming the Berkshire Hathaway of tech, and I am with you. I'm not worried about it. And look at that. Alphabet did their bond offering. Berkshire Hathaway got in on that bond offering with more shares. And you know what? It's down. You're getting a better deal today than you did at the bond offering. And now let's look at Venture Global. I know a lot of you are in it. I think Venture Global is a great company. I think it needs, I don't know. It's got to pay down some of the debt. But long term, LNG is going to be incredible. QXO has a market cap that is less. Let me think about how to phrase this. The combined revenue of the company, when you add Top Build in, I believe is close to the market cap. Hold on. Top Build, yeah. Top Build did $5.6 billion in revenue in the TTM. The revenue is close to the current market cap for the consolidated company of QXO. I think QXO is fine. In an environment where rates are potentially going up, the housing market's going to freeze. So this is not a good environment, but it's also probably great for long-term investments. But I'm not worried about a housing correction. We've been in a housing correction. We've been in an environment where mortgage rates have dried up the activity on the housing market. So no, I'm not worried about it at all. And SPY is now red. The market is officially red on a day when oil's down. That's the crazy part. That is the absolute crazy part. Oil is down a ton and the market just lost the green. Sometimes you can't make sense of this stuff. And it just goes to show you the market is manic depressive and it cares more about headlines than actual numbers. Is I truly believe, and let's look at now, I truly believe that the market is in a good place. Service now is up a lot. I mean, you're up 3.5%. That's really good. And this is why we can't just look at things on a one day. We have to look at things zooming out. The market will figure it out. Let's see where oil is. Where are the future contracts trading? 83.72. We got to get back to 75, but we're down 6.27%. We are down quite a bit. This is great. Market should be up. NVIDIA's news is impacting the market. It's okay. It is all right. The market, I mean, listen, I can't say the market's full of shit because this is what people are willing to pay. There's more people selling, and CoreWeave is still headed lower. And I may have to step in and buy more. It's not near 66, but I hate seeing it here. And I'm just seeing opportunities flash in my head. And I happen to like CoreWeave here. I think this is a good company. I think we're going to see a lot of good things on earnings. And we'll see. Let's see what the crew on everybody's favorite station thinks about earnings this week.
I know you've done a lot of work, for example, on employment. You're looking at this stuff. Do you have anything to tell us in terms of what you anticipate will ultimately be a positive return and or a successful return on all this invested capital?
Well, let's just agree at this point that a lot of the financings have already been put in place for the rest of this year. So at least for the next several quarters, we should still get some lift to CapEx spending. The key question becomes the market's reaction to the earnings. So the answer is I absolutely do believe that this will continue to contribute to GDP growth. But the critical thing is because markets have become so concentrated in the AI trade, no longer just in equities, also in credit, that becomes very, very critical if that does continue going into this week.
Is there enough demand for all that debt?
Well, at this point, of course, as a share of the index, the hyperscalers make up still a very, very small share relative to what industrials and financials make up. But the answer to your question, of course, is that at this point, spreads are widening out. And that's, of course, markets are beginning to ask, well, should we absorb all this debt? And the number one question is, are spreads widening out because of worries about the credit, or spread widening out because there's simply just so much coming to the market?
Because to tie the two stories together, if the Fed does raise rates either July or September or whatever, I do wonder what happens with those spreads on all of that debt and whether that creates more of a systemic challenge.
Well, and this is the transmission mechanism of monetary policy. When the cost of capital goes up, you should expect to see some slowdown. The consensus does expect to see a hyperscaler growth go down over the next several years. We are basically at the peak at the moment, but it does become very, very important whether there still is a race on the moment to absorb all the debt that's being issued, but it also becomes very important what is the race in terms of returning AI payoffs, the ROI on these investments.
Although last year we had an instance in which the Fed was cutting and let's say, for example, mortgage rates rose. Is there a scenario where the Fed might hike this time and might get some relief in the longer dated debt?
Yeah, because what's so unusual about AI at the moment is that it's not very sensitive to interest rates. What's very sensitive to interest rates is autos and housing. So those parts of the economy are not doing well. But everyone agrees, of course, that we got to invest more in AI. And everyone agrees that this is not really a function of whether interest rates go up 25 basis points this week or even in September. So for that reason, the tailwind to AI spending, both in particular on the CapEx side, but also the wealth effect continues to be very strong. And that can create problems for the Fed because that may mean the Fed will have to hike rates even more to try to slow the economy down because we have an interest rate insensitive factor of growth, namely AI spending at the moment.
To come back where I started here, I mean, one day they may complete this 10 gigawatt facility in Ohio to the tune of $500 billion.
Okay. I disagree with this. Look, raising rates has, I'm going to frame it like this, okay? If we actually look at the mortgages, okay, this is the 30-year. The 30-year fixed. The reason why I am so against raising rates, this is an inflation problem that is temporary, that is due to oil. Oil has dictated the direction of inflation. When you look at the 30-year fixed, in 2016, it was 4%. It got up to 5% in 2018. And then it fell steadily. And then when the pandemic happened, you were able to get a 30-year fix for 2.67. Nobody wants to refinance or move unless they don't have to, when you could have gotten or did get a 2.6 to 3.5% mortgage at a 6 to 7% rate. There's just no way. There is no way anybody wants to do that. The problem here is that there is so much debt on credit cards. The carrying cost of debt will go up if they increase rates. Increasing rates would be the worst thing you could do. You don't need the economy to slow down right now, by any means. We need oil down. If oil comes down, PPI and CPI will follow. It will follow. This is insanity. This is absolutely insanity. I don't know why anybody thinks that we need hikes. It does not make any sense to me whatsoever. The average American carries debt. Hikes would decrease their spending ability. This is not the situation you want. And CoreWeave keeps falling. We're almost going to break 70. We are almost going to break 70 on CoreWeave. NVIDIA, 198.71, ladies and gentlemen. It ain't stopping. It is not stopping. And this is when people freak out. AMD, and then we're going to look at the Qs. 481, big reversal. Where are the Qs at? We're almost down 1% on the Qs. Like I said, people should not be worried about a fall. These are good long-term entry points. Nobody can predict what's going to happen. The trend tells us that over time, the markets go up. Zeta, 1994. Okay. Where's SoFi at? We lost 17. 1672. There's a lot of noise out there, ladies and gentlemen. There's a lot of noise. We need to follow the profitability. How about the big guys? Where's Meta at? Meta's falling off again. Back to go negative. Microsoft. All right, Microsoft's holding good. Yeah, can I give the other side of the argument? Yes. Companies are spending too much on CapEx. We don't need all this much compute. You're going to have breakthroughs in technology that rival Micron, SanDisk, NVIDIA, and AMD. There'll be cheaper alternatives, and OpenAI / Anthropic will become absolutely commoditized and lose monthly subscriptions and not be able to afford the data centers. That's why NVIDIA is backstopping it, and the market is a house of cards that's going to go down 50%. That's the other side of this. I mean, do we actually believe that? I sure as hell don't. But yes, that's the other side of it. I mean, it's very easy to make that argument. It's hard for me to believe that argument. I mean, I don't know how you can believe that argument at all. That's not what we are seeing. What we are seeing is that these companies Dougie, I agree. Falsely using tech to rebuttal tech. I agree. Because what do you think? Micron and NVIDIA that are spending so much on CapEx that they're not going to have their own breakthroughs? We want breakthroughs in technology. Breakthroughs in technology are good. And I got news for everybody. Breakthroughs always happen in technology. Always. Micron has 16 new strategic deals that are absolutely incredible. Everybody is still buying NVIDIA chips. Everybody is still buying AMD chips. The hyperscalers continue to build out infrastructure. There is no actual data that is indicating that this is going to stop. This is just speculation that it's going to. So breakthroughs in technology are bullish semis and memory. It's not bearish because you're going to have breakthroughs with those companies that make their products even more viable. You think NVIDIA's Vera Rubin system isn't a breakthrough in technology? It is. It's a breakthrough based off of the Blackwells. And every company wants it. As Micron develops new chips, as NVIDIA develops new chips, it keeps the cycle going of companies wanting to purchase them. It is absolutely viable and good. Let's look at SMH. Oh, ugly, ugly, ugly. 4.4% today. Memory and chips do not only go up. Let's be very clear. But we always have breakthroughs. And these companies are not stopping spending. This is becoming a freak out. ORCL. Oracle lost 120. Yeah, let's see what SanDisk is doing. Oof. Down 13% today. How about Micron? 859, down almost 6.5%. Micron's getting even more exciting here. Now, keep in mind, I have often said when you get, oh boy, and then there was Jason, and then there was Mr. Jason. I don't short Jason. I would listen. I'm one of those weird people that would rather not make money shorting because I think it's bad mojo. I don't believe that's not the way I want to make money. It just isn't. Okay, we may get another leg down on NVIDIA. We've lost 198. We may get another leg down. It's okay. Yeah, keep in mind, a lot of people are freaking out. The market still at all-time highs. That's the other thing that you got to remember. The market is still at all-time highs. There are a lot of good companies in here. Earnings growth is over 20% in Q2 year over year. Companies are still compounding earnings. So tech is ugly. Tech is absolutely ugly. But you know what? the market is actually doing pretty good. Alphabet's in everything. I got to agree with Dougie. Alphabet is in everything. I mean, they have their hands tied in everything. And how can you argue with profitability? I agree with this. Most people say they're long-term investors, but they're really just traders. Most people don't know what long-term means. Long-term, to me, everybody knows what I say, 5 to 10 years minimum. You got to be willing to take a 40% haircut or a 50% haircut. I mean, I have a track record of it. I've owned Meta since 2012, 14 years. Owned the S&P for a very long time. There's several individual companies I've owned for more than a decade. And when you look at the S&P, we are still at all-time highs. Yeah, people don't want to invest in McDonald's. People don't want to invest in Home Depot because they're boring stocks. I don't think they're boring. I think that McDonald's is a very exciting stock. It's just not doing what everybody wants it to do. But it's also trading at a very low valuation. It's in a huge drawdown, yet it's compounding earnings, and it's about to become a dividend king by increasing the dividend for the 50th straight consecutive year in September. But nobody wants it. Everybody is so, and look, I'm guilty of it too. I am very exposed to big tech, but I have a very large position of my portfolio in the S&P, which helps buffer days like today. And if you're in one of these names, you're in AMD, you're in NVIDIA, you're in Meta, you got to be willing to take the bumps along the way. Nobody ever gets out unscathed. Everybody has to deal with volatility. It's how you deal with it. And once again, this is a situation where I honestly say I don't care, because the money that I have in the market, and I think this is the way people should look at things, right? The money that you have in the stock market, are you using that to pay your bills? Now, if you're trading, I get it. It's a different thing. But if you're not a trader and you're investing, you're not using the money in the market to pay bills. If it goes down 10%, it's not changing your lifestyle. That's if you're a real long-term investor. I mean, it's not that I don't care because I'm up. It's that I'm talking about reality. If you're a trader, yes. Jason, check your message. And look, if you were buying NVIDIA, I'll tell you this. I think NVIDIA is still interesting. And maybe it found a bottom, maybe it didn't. We'll see. We're back to 198. Maybe we get back to 199. But keep in mind, we're in a different market. We're in a market where information moves quickly. People trade and sell on a dime. Algorithms get a hold of things. People are on way too much margin. And for all we know, this could have been a sell the news that got over exaggerated because people got stopped out of positions. There's a lot of components to the market these days. And I think that a lot of people need to take a step back, take a breather, and just relax. And just relax. And look, if you don't think Jensen is a good allocator of capital, you shouldn't be invested in NVIDIA. If you don't think the hyperscalers are doing the right thing for shareholders by allocating to CapEx, you shouldn't be invested in the hyperscalers. And a lot of people are probably just better off in an S&P 500 index fund. Because on days like today, if you're getting stressed out because the market's down, I'm sorry, it's not worth your health. It's not. I mean, there's a lot of things that are down, and a lot of things are also still up, but that's what makes a market. Intel, 88. Marvell, 186. It lost 200. IREN, 35.74. Taiwan Semi lost 400. Tesla 305. CoreWeave trying to hang on to 70. But you know what? This is what makes a market. And there he is.
Oh,
how are you?
Man, I was about to. I'm good.
Are you running scared today?
What do you mean?
I mean,
No.
you look fine. You look calm. Are you running scared like other people?
You know, StreamYard is pretty cool.
What do you mean?
Wrong. I was gonna dual stream it, checking in so we can get some more with the milkman. I usually actually here we go. Okay. We'll dual stream it. Maybe we can get some extras. I usually actually coming into today, I had I think this might be the lows, maybe, by the way, a little bouncy here. Dude, that was just a knee-jerk reaction. I'm actually kind of excited, depending on where you are. So this is why days today, Senor Milkman, which you reminded me, I could really, you know what sounds really good right now? Is some drinkable yogurt, which I do not have in my fridge, and I'm a little upset about. So that's a bummer. But dude, this is good. This is good. I think this is a knee-jerk reaction. You know, structurally, I think we could get a little bit lower. Coming into today, by the way, I was actually, how do you say this? I had some Amazon put credit spreads, very aggressive put credit spreads, as aggressive as you can get. I had like sold some 235 puts and quickly closed them this morning for a nice 50%er. I am short some things in the trading account, namely GDX and DRAM. GDX, I think you're right, like gold peaking, oil still very high. I mean, that just makes sense fundamentally for that to come down after that index having ripped so heavily. But across the board, dude, what is the headline today? It's China starts massive production. I'm reading on the information, right? Homegrown chip making tools, Amcor down like 10%. Dude, ASML down over 10% from the pre-market highs. Holy moly. Guacamole. Yeah, I think some things are definitely going to come in hot, or already coming in hot, right? Intel, what was Intel? 95 this morning, just kind of hit 86. This moment right here sets us up for that kind of like flush out. I don't know that it's done just yet, but I know that it's a lot closer than it was before. So, and I don't hate your Qualcomm idea. I'm already in it, but I was thinking about adding a little bit too, just ahead of earnings and then finishing the position, just partials, and then finishing the position after earnings, assuming it does okay. But
yeah, Qualcomm could go lower.
It's
worth
125. It's worth. Oh yeah, it could go to 100 for all I care.
Yeah,
right? But you said that already. It's like you have to be long term there. You just muted. Somebody's muted. That's okay.
Mine should be fine, but Qualcomm could go lower. It's a 28, 2029 flag.
Am I lagging?
Probably. You just did your want thing. Yes. Akami. Dougie wants to know about Akami.
Oh, I think Akamai. So here's my
Akami, same thing.
So not tomato, whatever. Dude, here's
Akami was a video game company, all right?
Was it?
Yeah, back in the 80s.
Holy hell. I don't even remember that. Anyways,
oh yeah.
Dude, so Akamai, I made a video, by the way, on my logic for the stock drafts. I did not release it because I think I need to restructure it because I'd rather have it just more about the logic. Akamai, I think is dumb. There are some things that I think are really dumb. What's the market cap on that thing? Dude, it's gotta be stupid cheap. AKAM. at $109. This is nearing. I think it could see 100, but they're going to report real soon, like real soon. When soon? On August 6th. So this is gearing up to be like a. Here's what I'll say. This moment here is when people start throwing out the babies with the bathwater, right? There are some, and I think my point is there are some stocks in this general AI trade that will never come back from this moment, that will likely go all the way, like to being a penny stock. You're probably looking at a SPAC moment for certain situations where the wheat gets sifted from the chaff, right? Where like as we go through earnings season, companies to me like Akamai who have, here's my bull case. They signed a $1.6 billion deal with Anthropic for infrastructure as a service, by the way, at the edge. And they have the partnership with NVIDIA, the only one of the cloud CDNs, content delivery networks, that have an official partnership with NVIDIA to deploy their gear at the edge. Honestly, I used to spec this stuff for a living. I can tell you that the infrastructure that Akamai owns and operates is the most expensive gear that you can possibly buy in the industry. And it's not a footprint that you can spin up anytime soon in any sense of speed. So they have a moat, and this is their moment, I think, across the board for all CDNs. That said, people forget that they have these deals. $1.6 billion, by the way, is a 7-year contract. So it might not sound that big in terms of like what people are used to thinking. When you think about like a 500, what was the new NVIDIA data center deployment? But it's a lot when you understand that the average deal in the industry for a CDN, just so you know, is like a couple $1 million. A couple $1 million is the average deal for a content delivery network. A few $1 million. Akamai did 1.6 billion. On a single deal, completely dwarfing anything that's ever been new precedent altogether. And it's probably expanding on that contract. So I will say that there are gems that can be found here now. But if you're bottom fishing in high beta, low quality, earnings are going to show what's true, right? And so some of these companies will not last. Some of these companies will turns out that there's too much pull forward, and maybe we got ahead of our skis. Maybe Akamai is exactly that. I don't know. I think that's more of like, this is where I would lean on Steve. But what I do know is that as we get in the middle of this AI sell-off, which seems to be bouncing a little bit right now, this is probably one of those opportunities where you can go shopping and find a good quality company before it reports, because after it reports, the analyst will already model it and your asymmetric bet is essentially gone. That said, does it have to turn around right here, right now? No, right? Monday morning, it's a knee-jerk reaction. I don't usually trade on Mondays because I think Mondays are nonsense. Like, it's literally just like continuation of whatever weekend headlines. And it's usually a knee-jerk reaction. And then after Monday, the market kind of like settles down and really starts to digest what's really happening. So I think that's exactly what we're seeing right now. We still have, we've gone through Google. We've gone through Tesla. Who else? We've gone through Intel.
So this week we have, and before we get to that, for all of you asking where Amit is, I wasn't going to say it, but he posted it. I don't know if he said it on Friday or not, but he is at a Palantir event. He posted a picture not too long ago of Dr. Karp speaking.
Is he in my neighborhood and he didn't call me?
No, it's in New York.
Okay, I was about to be like, dude, what are you doing? He said he had something in New York. That's right.
Don't worry. He will be back this afternoon. Now, as far as what Jason was saying, look, I agree. This is a fake out. There's things bouncing, And did we hit a short-term bottom? I don't know, maybe.
Well, so there's
Nvidia's rallying again.
There's a specific way to trade this, right? Because I will tell you, as an options trader, for any option traders out there, volatility currently is in something that we call backwardation, and it's very hard. The best trades are to sell short-term puts right now. That's and it's not to buy external like upside calls. At least exactly where we are right now. If you asked me 2 weeks ago, the best trades was to sell upside calls because we were towards the high. In both scenarios, volatility was too high because of earnings season. And as we get beyond earnings season, that will start to burn off and we'll go back into what we call contango, where volatility is actually priced correctly. But you can take advantage of this as a trader right now. I think on a day like today, Monday, if you day trade, then here's the, like, this is the day. And that's why I was like kind of laughing, because like today is a day that just convinced me to become a trader. One of these many times that would convince me to become a trader in general, because I have a long-term investing portfolio, just like everybody else. And I'm very much into that. But I don't have a day job. I trade for a living right now. And before then, it was like I saw these intraday opportunities where this can be a fake out, right? But taking a day trade, little small short position out of the gate, if you have a system, I'll take those profits. You know what I'm going to do with them? I want to buy more stock. And literally that is the compounding game of a trader. Like if you do it right, that's the whole purpose. I don't short in a long-term account either by any means, or an investment account. I think that's kind of crazy. But for a day trade, yeah, no problem. Like we can make a few 100% easy money. But and then go invest those profits and compound just like that. But I think that's the message. It's not about shorting stock. It's like seeing an opportunity. Can I make some money right here, right now on a fake move that might be overly exaggerated? And then,
so this is the move I think is very over exaggerated right now with Nvidia. I mean, look, companies are not stopping deploying CapEx. We know that Alphabet increased their ban from 190 at the top to 205. We have the largest companies still reporting this week.
Yep.
They're all likely to increase CapEx.
We have Fed stuff coming too.
Fed stuff coming. This is all jitters.
What I was going to say about the mags is that, okay, we've gone through, I think, half of them or less than half. We have Amazon, Microsoft, and Meta.
And Apple this week.
And Apple. Okay, so Apple's already made most of the move, and so I really wouldn't count on that one right now. But what I would say is between Amazon, Microsoft, and Meta, I feel like if I were to take a bet on one of those, like I'm probably going to get at least 1 out of 3. In this scenario, my odds have gone up just because Google's behind us, and so is Tesla. But yeah, Apple is not setting up for a big move. I don't think it's way at the highs. It doesn't usually make massive moves. Amazon's probably the one that could make the biggest move. Microsoft's typically a steady, like.
I'll tell you, Meta could make a huge move.
So Meta, between everybody that's left, Microsoft and Apple don't usually historically move that much, but Amazon and Meta, yeah, they really do. It's like Google does, Amazon does, and Meta does. Those are the ones that make moves.
Meta can make an incredible move higher. The reality of the situation is that they produced 33% year-over-year growth in Q1. They have a lot of things going for them. All Zuck has to say is we are not spending on metaverse as aggressively, and we are shifting that spend to go sell compute, et cetera, and this thing will go to the upside.
Like if he can articulate a strategy to get into the channel or whatever, yeah, or like say he doesn't even have to be in the channel. You'd be like, well, I guess my gut says it would have to be in the channel, but doesn't. I don't think it actually does. But you look across the board, intraday right now, and it's not. The sell-off isn't everything. And the good part about this is, let me check before I eat my words here. I don't think that I'm seeing cash run to the dollar. No, a little bit, but I'm seeing Apple at the highs. I'm seeing some software move a little bit. I'm not saying that software's bottomed, but what I am saying is that in a real, like, legit bloodbath, I'm not seeing Reddit bouncing this much. I'm not seeing Apple up this much. In a real, like, doomsday scenario, we would just see the dollar up, and that would probably be the only thing, right? And maybe some just true safety stocks. I don't actually see that. So for those reasons, I'm not seeing a straight up run to cash. I'm seeing some pre-earnings jitters on some high flyers off of some headlines that are probably accelerating some things, and having the indices at a, let's say, precarious level, taking some profit before their companies report on the AI trade. I mean, it makes sense when you think about it. It's just now a matter of like, well, all right, when do they stop, and do I have to step into it? And I think, to your point, if you have a long enough time horizon, you can. You just, my caution is just be very careful with quality and make sure your time horizon is long enough, and don't do it all at once.
Yeah, I'm just not willing to step in front of the freight train because I don't know when it's going to stop. And the biggest thing is, when you think about capital deployment, there's $2.1 trillion in backlog for compute for 4 companies. And Alphabet straight up said, of their 518 or 522, whatever it was, billion of compute, 50% comes into revenue over the next 2 years. I mean, you're talking about $10 billion a month converting to revenue.
I think knowing that is exactly what has the market on edge, though, right? Because, you know, with people that don't have the fundamental background to say, is this expensive or cheap right now? Like, they might just assume that all of that's already priced in the stock, and therefore they're sold out. So what's the rest of the upside left over? That would be the cautionary kind of note on that. And it's like, okay, well, let's say they book all that tomorrow. Does that really change? If they booked all that tomorrow and didn't increase guidance, the stock would probably fall. Like, if Amazon booked $1 trillion in 1 quarter and didn't increase guidance, the stock would probably crater, quite frankly, from here. I mean, just so you know, because it's so the audience knows, that's how the market works. It's like, what comes next? If there's no next, then people don't really get excited. And I think that's the caution. That's what I'm seeing in the charts. People are kind of afraid of.
People are afraid of a lot of things, but once again,
but we don't have, like,
these companies are good capital allocators. You shouldn't be invested in them.
Yeah, I think the question is, I think in this market, it's were people actually overly invested? Were they over leveraged to over their means? And that's what I don't know, right? Because, like you're saying, hey, look, you shouldn't be invested if you can't stomach this, or if you don't intend to take a ride on a company that legitimately goes into an investment phase. I think we're just seeing that extra level of, what do you call that? Like, excitement that maybe people were overly exposed come out of the market. And
look, how much of this is Burry spurring things? I mean, think about it. A lot of people that are long-term investors have wrote companies down more than 50%. I mean, you look at him, he rolled Palantir down from 210 down to 109, and then back in the day.
Oh, I just did Hoodie from like 160 something to 70.
A lot of people in the community rode Hood all the way down and it came back.
Yeah.
A lot of people back in 2022 rode Meta from, including myself, 420 or 450 down to 90.
Yeah. So my only sentiment on that statement was, how many of those people were actively allocating at the highs more than they could afford to allocate? And now that reality set in, what are they going to do? Because, one, if you were allocating at the highs, you might not have that experience to know, like, okay, just chill for a little bit, because maybe they thought, oh, my neighbor, my barber, my taxi cab driver told me to buy Micron, and here it is up 80% a week later. I should have bought it, so I'm just going to buy it now. They don't know. access to markets is easier than it's ever been. I just think it's a shakeout right now. And after this earnings season, which means, not right now, but as time goes on, we'll start to see, what the real opportunities look like. And some of these companies are going to be a lot higher. Some of these companies are going to be a lot lower after their earnings. So I think now is even, again, why research matters, why understanding like what is your edge on, owning a fundamental story of a company. Like, do I really honestly believe it? Your beliefs get actually tested here. And so I think people are starting to find out what it actually means to be an investor.
Yeah, I mean, look, I would suggest people do the fundamental research. I mean, Meta's the perfect example, right? Meta's down significant amount this year. It reached 796 in the past 52 weeks. It's down to 606. I mean, you're talking about this is still in a bear market. This is a company that put up 33% revenue growth year over year in Q1. This is a company that has incredible margins with an environment. They're about to start upselling business customers on Facebook and on Instagram with their AI tools. All Zuckerberg has to do is come out and say metaverse is done. That's all they have to say. And then when it comes to compute, you either believe Lisa Su and Jensen or you don't. But if you do, this is a shakeout. And it always is amazing to me. People scramble when companies are going up to invest, and they get cautious when companies are falling, but nothing has actually changed in the fundamentals. And it doesn't make sense to me about why you wouldn't want to buy more at a cheaper price in dollar cost average in. That never made sense to me.
I think we're just seeing like people getting frustrated with the AI trade, as they probably should be, quite frankly. It ran up quite a bit. The chat's hilarious. Like, is it higher or lower? Guys, it's lower. What the hell? Do you not hear us talking? Be prepared for lower. Hello. But is it going to be a buy? Yeah, probably, depending on what you buy, right? And not everything's going lower, but things might be a little bit later on. Who knows? Anyways, dude, what the hell? Wait for earnings. That's what we both said. Wait for them to tell you. Anyways, the chat is funny.
Well, you know what's crazy? Somebody made a comment about Meta, that they're lighting 150 billion on fire. I got news for you. I have likely been invested in Meta longer than everybody here because I'm in it since 2012.
Yeah.
Okay? I don't give a shit that they're lighting $150 billion on fire. You want to know why? Because their operating cash flow has gone from 16 billion to 116 billion from 2016 through 2025. And you know what? They still, over the past 3 years, not including Q1, over the past 3 years, they've done about 140 billion in free cash flow. They can afford to take risks, and you never know what those risks are going to turn into. Zuckerberg has earned the right to invest. And if you don't think you're spending, don't invest.
No, yeah. So I think the audience matters, right? So like, okay, what does that mean? In short term, it means that EPS is very likely going down. And if price follows earnings, then yeah, price will probably come down. But in the long run,
wait, for what company?
Meta.
Meta's EPS is expected to only go up.
No. So what you just said would mean that the earnings would go down.
No, I'm talking about free cash flow. That's not earnings.
Earnings would go down if they start spending like crazy. They're going to spend their earnings. That's what we're talking about, net. And that's what I'm saying you're seeing on the charts near term. But long term, like you're saying, it'll work out.
So it's calculated two different ways. And right now, the earnings are expected to be 31.72. I get what you're saying, but that would be on a free cash flow basis. But on an earnings basis, they're expected to do 31.72 this year, 37 next year, and 43 next year, the following year.
Right.
Earnings is expected to only compound
if they keep it in line. And I think that's what the market doesn't. They're not They're not sure if these companies will keep it in line or if they're going to spend so much because it's so important that it just eats into earnings. That's what I'm like. I run a business, right? I could spend $100,000 a month building content if I want to. It's very easy to do that. Let me tell you,
Spending money is very easy to do.
It's very easy to do that. And if I wanted to run a marketing campaign, I could equally as easily spend $100,000 a month on marketing and see zero ROI from that. That's kind of how marketing works, by the way. And I think, and that would eat into my company earnings. Like that's what people are just kind of afraid of. At least that's what I see in the charts.
Yeah, I mean, listen, people have a right to be afraid. People have a right to disagree, but that's when you own the index instead of individual companies.
Yeah.
And if you don't believe that Zuckerberg knows what he's doing or he doesn't have the best interest for shareholders at hand, don't invest.
Yeah, because with that example, like if I did spend $100,000 this month to generate content and $100,000 to run a marketing campaign, and I only generated $100,000 this month, this let's call it the quarter, that quarter is going to be negative for that quarter. But to your point, if I did it right, it's not that I'm going to see like the fruits of that quarter. It's more like that money should come back to me in spades many months or a few months after the fact.
Yeah, and one of the things I think is so important for people to really take a step back and look at, it's very easy to look at 6 months and be like, man, they're spending so much money. I get that. But if you look back at a Meta and just look at we'll go to
which by the way is what just happened. Oh, I just bought some NVIDIA.
Think about this. You guys spend money to make money. If somebody was to say to you, a company is going to scale from $27.6 billion of revenue in 2016 to $201 billion in 25, you'd be like, hell yeah, sign me up.
Yeah.
You know how hard that is to do?
Pull up a chart of Microsoft right here, right now. Right?
A chart?
Yeah.
Of what?
Chart.
Revenue or just price?
No, just intraday Microsoft, MSFT. And this is my point, like right in your face, if you can do it. Intraday chart. That's Microsoft as we speak. As we speak. Now switch the ticker to NVIDIA. Watch this. It's not that money's leaving the market altogether. They're literally just using some companies as their ATMs. They're still taking bets, right? They're still taking bets, like pull up Apple intraday, right? Like this is maybe a little bit safety trade, but like intraday Apple, intraday Google, they're still there. I mean, hopefully I don't jinx it, but guys, it's not a full blown bear market. It's just that look, certain things of, people are using them as their ATMs. And I hate these moments in the market where like, I remember as a trader, sometimes like in the early years, this mixing investing and trading is so hard because I remember in the early years of trading, coming from an investing background, I would just look at the market and be like, dude, this is stupid. This is just utterly ridiculous. The market is clearly using the best companies as its personal ATM. And the trader in me would want to go long. And the early trader actually did go long. And I kept averaging down. And the dip kept dipping. And it just made no sense. But it was like for, 6-9 months at a time that would happen every now and then. And eventually you turn out to be right as an investor. It's just very dangerous as a trader is kind of my point. And trying to time the bottom, I think as an investor, it doesn't make sense to even attempt to do that. The best traders also don't even attempt to do that. So yeah, I think this ends up being an opportunity that you can slowly average into with the right time horizon. I cannot believe ASML down 10% intradays. That's just insane.
The market's getting skittish. Look, Mr. Market is manic depressive. And that's the reality. It takes two people for a trade. There's both sides of it. And look, there's no one reason. I think a lot of people are worried about the Fed. A lot of people are worried about CapEx going up. They're trying to front run something that they have no control over. I don't try front running anything. And I'm not making any moves entering or exiting big positions.
No,
heading into
no.
earnings or a Fed meeting. Like that's suicide in my opinion.
Yeah. It's you make or lose I feel like you lose more often than not when you do that, quite frankly.
Got to have a long-term thesis. And look, those theses may not play out for 6 or 12 months.
Right. And people I think are just, or at least in the current generation, maybe just a little spoiled with the amount of V-shaped recoveries that we've had over the years, right?
Or instant gratification because everything is on demand.
On demand, options trading, futures, leverage, this, that, and the other. Everything's very easily accessible. Click a couple buttons. I mean, you guys don't realize when Steve first started to trade, he had to look up the newspaper and he would dial a phone call like to
$34.95
$35 like commission. So
Quick
it's
and
not
Riley,
like,
baby.
It's not like he was click in and out. That did not exist.
No, you had to read a newspaper. You got Newsday every day in New York. You looked at the stock prices, or you watched CNBC and hoped a ticker would fly across the screen to try and figure out what the price was, and then go spend $35 to buy a couple of shares. Like it was insane.
Which you would stay on hold for however long too. And
oh my God,
all over the place, right? And like maybe you don't even get through that day. Who knows?
And how about this? Sending funds.
Dude.
I mean, funding an account took like 2 weeks.
Not longer than that, dude. It was like I feel like it was like a month. Anyways, some accounts still take that long. But
yeah, I mean, look, it's we are. I mean, I'm in my 40s. I think Jason's in his 40s, and you know,
gray hair, dude.
It was a different world back then, and today the markets move a lot quicker. There's a lot more access to information. And you know what? There's a lot more advanced strategies that, in all seriousness, a lot of people just shouldn't be using because you're playing with margin, you're doing this, you're doing that. People are getting stopped out of positions. People are getting margin called. I don't use margin.
But that was my point of what I was saying earlier. I'm literally looking at people front running their margin calls, maybe not even realizing how much margin they were using, but deleveraging in general their portfolios. It's just going to get deployed again. But between now and then, I'm telling you, I'm telling my message is, it's not likely before earnings. It's not likely happening that they're going to front run because they're already in heavy profit. Everybody who's deleveraging is who was long is likely going to start redeploying at the lows, maybe right before the company reports, like literally right before. But between now and then, just like Steve's saying, there's not a whole lot of reason to.
Here's the other problem. People are saying Nebius is getting killed. It's down. Is it getting killed? It's up a ton over the past year. This is not getting killed.
Yeah.
This is a sell-off. This is not getting killed.
Yeah. I mean, Nebius is, but
CoreWeave is getting killed.
So the person that says Nebius is getting killed is probably the same person that bought it at 250, which, you know, you forced our hands in buying Nebius at 250 or something at stock drops. Did you see my note? I motion for a double down and or a reset on January 1st to make it.
Oh God, we'll see what happens.
A legitimate annual. Even Amit, well, I remember it was like, dude, we're so hoes, guys.
It is what it is.
Like before we even did it, we're like, yeah.
All right, so let's see where everything is right now that we follow or I follow. Costco, you know it's bad.
I have a request, like a legit personal request.
What's up?
ASML is getting decimated as we speak on the headlines. I think it's very knee-jerky reaction after a great earnings, right?
Okay.
I want to know what a stupid price on ASML would be from a fundamental perspective. I have it as a technical level around 1350s maybe, but from a fundamental perspective, what do you have?
All right. So, and keep in mind, I don't follow it, so there's no bias here. I'm not in it. I don't follow it. So ASML is 625 billion market cap, and this is just how I would look at any company. They do 35 billion in revenue growth 9.8%. You have ROE of 52% and ROIC at 37%. Incredible return on equity and invested capital. Incredible.
Right.
Profitability, it's a solid company, great margins. Free cash flow 9.6 billion. You're paying 46 times for EBITDA, 65 times for free cash flow. That's high, but what does the forward numbers look like is more important.
Does your report also tell you what its historical multiple is?
Yes. So I have that in the beginning. So hold on. Okay. ASML. So it trailing PE of 52.5, forward PE of 31. PEG of under 1, which is great. Enterprise value to EBITDA 41.
This is current or historical?
What do you mean?
That's currently?
Yeah, this is as of right now.
Do you have its 12-month average?
No, I only have trailing PE on the trailing 12 and forward. So now if I look at what they're expected to do on EPS, this is what I'm going to base an assessment off of. Today, it's expensive, but on a pure profitability standpoint, but for 75% growth, paying 43 times this year's earnings and getting 75% growth, and you're paying 24 times forward in an environment where ASML should continue to do well, I don't think is crazy. I would like to get in at a little bit of a cheaper price, but there's so much growth there that I don't hate the valuation here.
Okay. So it's a different logic. So I'm used to thinking like, all right, this company's average multiple is this. It's currently trading at this. And the gap between this and this from a multiple perspective is the price. So like I was trying to figure out what is the average multiple were to put it at what ASML, because I have not owned this. I'm looking at the chart. I'm thinking 1350s, which is like another 300 downside, but that's probably fine. It probably won't do that in a day. Although
yeah, and then the other question is, what are they doing?
$100 move in a day.
So if we look at the cash flow statement, a lot of free cash flow. What are they doing with it? Are they buying back shares? They are. They're buying back a ton. They bought back $12 billion worth of shares over the past 2 years.
Right,
so,
right.
Yeah, they're not issuing shares. They're buying back a ton. They're backstopping it.
This experiment right here, right now on ASML, I think is my point, right? We're like, this is obviously a good company. Like there's no question here that ASML is not just a good company. It's a freaking phenomenal company.
I mean, look at this long-term debt, 2.3 billion, and they have 8.5 billion in cash. Like they're not leveraged. Great company. Yeah.
Fundamentally, but tactically, it's trading at the high end of its multiple, right? So I think the question is even 10%.
I would tell you this. I wouldn't mind starting a position at this level and averaging down into like the 1500 range.
Well, I'm telling you, I can clearly see a 1350 on the chart, but I'm just trying to figure out what the average multiple is on the stock, and then if you took today's metrics and give it that historical multiple, what price would this stock be instantly? And I think that would give me potentially my answer, which it might be $1,000. That's what I don't know.
Yeah, I'd have to build out that algorithm to get me an average backward-looking multiple.
Okay, well,
not something I have.
You got to do it. Otherwise, somebody else is going to do it for us.
I can build it out.
Take too long. I'm just going to do it. But yeah, I would like to know that. And that I think that's the difference of like, okay, that's actual work. It's a lot of work, quite frankly. That's how a fundamental trader would probably trade, right? Like when it's full valuation, maybe not buy so much, but when it's discounted compared to its historical, this is where we would find those kind of like re-rating, if you will, trades. And clearly the AI trade got broadly re-rated higher, especially in some of the smaller companies, but NVIDIA unfortunately never got the benefit of that re-rating, or at least not to the extent the rest did. So, I mean, into earnings, that probably becomes like an easier bet, at least of not losing a ton of money, which I don't know if I said, like I had some buys go through a second ago for Nvidia, just was like auto. But,
Yeah.
you know.
Look, Nvidia under 200 is exciting.
Yeah, that's what's like. I just put something in earlier. If it's under 200, I'll nibble. Right, the deeper it gets under 200, the better. Sure.
Man, it's a 196.98 right now. To me, that's insanity.
We'll
All
see.
because they're going to backstop a $250 billion line on OpenAI, or they're in talks to. They could do worse things with that money.
I don't think that's why today. I think today it's a combination of the China memory chip maker going public at 500% increase. It's a combination of that. Plus, look at Amcor today. Oh, like instantly, the speed of the market is one day Amcor up 15% on news that I forgot. I forgot what the news was. Some kind of expansion.
Look at Micron, 868.
Yeah. Well, so that is a function of the new Chinese memory company. Right?
The market's trying to front run if they're going to get disrupted or not.
Yeah, and they're scared. People are scared, right? And then the Amcor is a function of the information or the advanced packaging, right? Chip making tools as China starts mass producing them, which is ASML, Amcor, probably like on semiconductor, all of your broad stocks in general. But like SOXX today is down how much?
SOX?
Yeah, that's the one that people actually own. SOXX.
Down. Oh, SOXX.
Yeah. Usually. From this morning,
4.5%, $23.
From this morning's high in the pre-market down to the intraday low. Holy crap. 7.5%. Dude, Steve, I'm just, again, I look at that and I'm like, wow, what a day to be a trader. Not, I know it sounds lame, but like, what a day to be a trader.
You are a trader. You just don't trade on Mondays.
And then take that profit and buy the friggin' underline, bro. Like, that's crazy.
I get it. But yeah, overall, I don't think there's anything to be worried about. I think that long term, the market's going to be fine. This week is about the Fed meeting. It's about what happens with oil.
The Fed meeting.
What happens with CapEx.
Yeah.
Ultimately, CapEx should be very good for chip companies.
We have a lot of liquidity coming into the market today, too. Did you tell them about that? Or this week? From the Fed perspective, we have 2-year note happening as we speak. The 2-year note, it's important. So of all the bond auctions, the 2-year and the 10-year that actually move the markets pretty quickly. If anybody's ever heard of this 2-10 spread, it's those two things, and that's actually why the 2-year note and the 10-year note end up moving the market significantly. 2-year comes out 4.315, I think, just now. That hit the tape literally as we were speaking. So slightly higher. And the 6-month comes in also slightly higher right now. So the bond market does, in fact, move the stock market. ADP weekly, consumer confidence, and let me see, what do we got? Oh, bro. It's FOMC week.
It is. There's a Fed meeting starting tomorrow, and the press conference is Wednesday at 2:30.
Yeah, and then right after that we get PCE and the second look at Q2 GDP.
So this is a big week.
It's
like this week is
like a nothing burger week.
You have earnings, you got oil, you got the Fed, you have so many things.
Yeah. What's happening on Thursday? Thursday is, in fact,
Amazon and Apple.
Amazon, Apple, and PCE and GDP. Okay. So Thursday is the day that can go absolutely bonkers. So, like, here's where I'm at. Nothing in the charts today like every Monday, really matters at all. Because think about that for a second. Come Thursday at the close, we'll have PCE, we'll have GDP. Will we have already been past the FOMC? We'll be beyond FOMC. We'll have Amazon and we'll have Apple earnings behind us. Guys, nothing matters before Thursday. It's all a bad dream or a good dream. I don't know.
So
But
here's the economic calendar that I have built out on nowflation.com. This is everything happening on the economy. Nowflation.com, baby. Wednesday, interest rate decision, Fed press conference, the 30-year, and then Thursday is the Super Bowl for many people.
Look at Amazon drill team 6 back to 231. Sorry.
PCE, personal income, jobless claims, GDP, personal spending, 12:30, witching hour, and then you get Q3 GDP now from the Atlanta Fed.
Dude, I'm just saying between now and Thursday, it's possible that the entire tech index drops 10% and then rallies another 10% between this coming Thursday and next Thursday. Like, that's the setup technically that we're in. I hate to say that out loud. Holy hell. Momentum.
And then you got PMI on Friday.
Yeah, I'll tell the crew. Momentum right here, right now. If this gets any worse, like you don't need to buy long-term protection. It stairs up, elevator down. Historically, we've actually seen elevator up, stairs down. It's been stairs down lately, and elevator up. But this looks like Panikins potentially getting on the elevator if this goes any lower. But I think it'll be short-lived, or at least be over. This looks like a rip the Band-Aid moment. Rip the Band-Aid off setup if it does really break.
We got to see what happens. I mean, look, NVIDIA.
How long do you stream for today?
What?
How long does your stream usually go?
I'm gonna end it soon.
Oh, okay. So I'm gonna head out because I usually start a stream at 12 o'clock on Mondays. If anybody wants to hop over there, I'm probably gonna start it like 12:30, just because I gotta prep a little bit beforehand. And we might run a little technical Tuesday type requests saga. If people do have tickers that they want to request, I can do that. But I would just say I have to prep for that. Yeah, I think it'll be good.
Sounds good. Well, thank you for coming on, Jason. Really appreciate it.
Appreciate it, man. And yeah, guys, nothing really matters till Thursday. This could do whatever it wants. This looks wild, but we shall see. No reason to jump out of it. All right. Love you guys.
Later.
Wait, I need a hold on. Later.
All right. So thank you to Jason for coming on. Now, let's see where everything is. BMNR 1739, trying to catch some life. Reddit 179. Salesforce is running 6%. Zeta catching a bid 2028. Service now 104.32. Gotta love it. Strategy is trying to get back to 97. Palantir trying to get back to 130. Oracle lost 120. Take-Two 240. SoFi lost 17. We're at 1691. Microsoft 391. Verizon 47.41. 47.41 on Verizon. Chris's spreads are pumping. McDonald's is up 5.50. I like it, up 2%. I am a McDonald's shareholder, about to become a dividend king. 50 years of consecutive dividend increases. Netflix is up past 70. QXO is still below 14. Meta is 603. What's losing? What is losing today? Qualcomm's down 165.90. We got the Qs down a tick. Broadcom 377.53. Hoodie O Hood 93.48. Tesla trying to hold out above 300. CoreWeave just broke 70. CoreWeave getting smoked. It's at 70 again. This is ugly. Taiwan Semi 390. SpaceX 111. NVIDIA under 197. It's fallen. It's fallen hard. Micron fallen. Crude 83.19. AMD 479. SanDisk 1262. Look, there's a lot of things happening. Long term, I think we're fine. I think that this week is an important week because we're going to see CapEx deployment. And what I'm going to leave everybody with is if you're not ready to face a drawdown, I mean, indexes is probably a better situation. I am not worried at all about NVIDIA. I'm not worried about the companies I'm in. I'm excited for the market. I'm excited to see where we go. PB, listening to Free Falling from Tom Petty. We got a Fed meeting. We got earnings. We got a lot of data coming out from the economy. And you know what? It's a big week. I will be back later tonight. Please do me a favor. Couple favors. One, if you enjoy the content, please subscribe to the channel. Two, Tanner will be live at 1 o'clock. Please go follow Tanner. I'm sure that he's going to have a lot of things to say about NVIDIA. Go watch him during the day. Amit said he will be back at 3:45 for the market close. I will be back on later today and then with Chris at 9 o'clock tonight. And I will see everybody later. Thank you so much. I really appreciate all the support. Have a great afternoon. Drink your milk. Have a great lunch. I'll see everyone later. Thank you very much.